What do you want to know today? Ask a question or visit SearchGo to find answers now.
Who are U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and then Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Yeah. Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. I'm Anna Edwards, live in London with Tom Mackenzie.
And here are your top stories. Debt ceiling progress. Democrats indicate they'll accept a Republican compromise to allow a short-term increase on borrowing, postponing the risk of default. Global stocks climb. The great gas reversal. Putin steps in, offering to ease Europe's energy crisis with strings attached. The move cools a surge in prices. And a Bloomberg scoop. The ECB is studying a new bond buying program to prevent market turmoil when pandemic support is phased out next year.
Let's take a look at the futures picture then, Tom, and it looks pretty green around me. It looks pretty buoyant. DAX futures to the upside, Euro Stoxx 50 futures to the upside. So we are expecting to see a bit of a rebound at the start of trade. We missed out on that late day rally on Wall Street yesterday here on European equity markets. So we play catch up this morning. We're factoring in a little bit more optimism, maybe around the debt ceiling and also around some of those gas prices again, Tom.
Yeah, the Asian session has been positive. The first up session so far, at least across the MSCI Asia Pacific in 5 sessions. Hong Kong tech stocks back very strongly indeed after hitting a record low yesterday. The feed through to the European markets then, you've got the FTSE 100 gaining 0.8%. You do have markets, by the way, money markets pricing in a rate hike by the BOE as soon as December as a result of these inflationary pressures. The break-evens jumping to close to just over 4%, in fact, yesterday for the 10-year. In terms of Spain, you're seeing gains there, solid gains of 1.3% on the IBEX. The CAC 40 is gaining by 73 points as well. The Bloomberg scoop on the ECB planning a change and an additional bond buying plan to ensure that there isn't that market instability. Let's switch on then and have a look at how things are playing out across the sectors. Energy, of course, will remain in focus. Vladimir Putin riding to rescue, not bare-chested this time, but in front of the cameras, suggesting that Russia could do more to increase supplies. The energy sector is gaining 0.3%. Utilities gaining close to 2% there. Banks, again in focus as a result of what we've been reporting on around the ECB's new bond buying program that remains in discussion, of course, gaining over 1%. Tech shares soars as well, gaining around 10 points. Of course, there have been question marks over just how sustainable any upside can be for technologies. Yields continue to grind higher, still above 1.5% comfortably on the US 10-year. But today, this index and this sector is gaining 1.3%. Anna.
So, strength for European equity markets for this morning, opening to the upside. That positive sentiment continuing what we saw yesterday in the United States. We had a bullish reversal with news of a possible deal on the US debt ceiling. That was part of the reason for that. There's a lot for markets to digest then today. We also have the prospect of a meeting between President Biden and Chinese Premier Xi Jinping, and gas prices taking a breather after that intervention that we've been talking about this morning from Russia's Vladimir Putin. Let's put all that together. Miles Bradshaw, head of global aggregate fixed income strategies at JP Morgan Asset Management, joins us now. Miles, really nice to see you. So we have a better picture for risk assets this morning. And just to underline that, I want to just mention that we've had a headline on UK natural gas prices. So UK natural gas futures dropping as much as 17%. That's on the ICE index. So a sense that maybe we're continuing with some of that drop back that we saw yesterday on the European gas narrative because of what Russia has had to say. So there's that. There's the debt ceiling in the US. This rebound in risk assets then that we're seeing today. Do you sense that it has legs, Miles?
Yeah, there's a lot going on, isn't there? And I think it's important to separate the trend, the underlying macro conditions with all these short-term noise that we're getting in terms of gas prices soaring, then plunging back. The fundamentals of the economy are good. You know, we've got strong household and corporate balance sheets. We're likely to have a gradual withdrawal of monetary and fiscal support, which is, you know, evidenced by your story you've got on the ECB merging the PEP and APP. And this is supportive for risk assets broadly, yes. So, you know, if I look at my portfolios, the outlook is we expect corporate defaults to remain low. We expect corporate earnings to be good. This is a market where we want to be owning higher risk assets as high yield and European bank capital.
Mars, what about inflation expectations becoming baked in? We saw this, of course, with the break-evens yesterday here in the UK. We saw gilts higher, comfortably above 1% then. A similar picture, of course, across many of the German benchmark sovereign bonds. Are you concerned about baked-in inflation expectations and what that may mean then for earnings longer term?
This is the key risk because, you know, we've had temporary inflation shocks, particularly in the UK with utility prices before. But it hasn't become embedded in inflation expectations. And the UK is one market where inflation expectations have shot up. And that's partly to do with Brexit in particular and concerns about labour supply. So it's one thing that we are watching very carefully, because if inflation expectations shoot up, it means that you can't have the gradual withdrawal of monetary support that the economies need in order to support growth. My own view is that, you know, it's unlikely we're going to get a de-anchoring of inflation expectations in places like the US and the Eurozone. And indeed, even in the UK, you're seeing the central bank beginning to react to rising inflation expectations. So I think when we look at inflation expectations in the market, we've got to remember that not only does that include expectations, it also includes inflation risk premia. And clearly, inflation risk premia is on the upside. And that's what I think the market is signaling here. That's the risk to the market.
Inflation risk premium to the upside, Miles. What does all of this mean then in the UK context? As you mentioned the UK there, what does it mean in the UK context? As the markets increasingly factor in an interest rate hike here in the UK this year, we've seen it from some central banks in Norway and in New Zealand. Is the UK the next one to go? And would that be the right move for the central bank? Because the central bank governor has told us many times himself that there are various factors pushing up inflation that monetary policy can't solve. You know, monetary policy can't make more chips get to the right places more quickly.
This is a problem you've seen in other places. Poland yesterday rose rates unexpectedly, or in terms of market expectations. You've seen it in Hungary, you've seen it in Chile. So I think there's a number of things going on. Firstly, you've got rising inflation expectations, which is a concern. You've got high levels of inflation, which also is a concern because that feeds inflation expectations. But in all these situations, what you've also got is a very strong labour market. And I think the Bank of England situation is furlough has ended. The expectations was that unemployment would increase. You haven't seen a pickup in redundancies as furlough has ended, and so that gives the bank more confidence. The labour market is actually quite strong. Inflation expectations are high. It seems sensible that they start to withdraw the stimulus that they've given the economy, yes. I think the Bank of England and the UK is one of the more vulnerable economies to so-called stagflation, and that's because of Brexit and how Brexit has made the economy more fragile because it's broken the flexible labour market that we used to have. So I think the UK is slightly different than if you look at the Eurozone, for example, where they haven't had the same disruption caused by Brexit.
Miles, the S word and stagflation and the consequences for the UK and monetary policy. Miles Bradshaw, head of global aggregate fixed income strategies at JP Morgan Asset Management, stays with us. We'll be talking the US as well, and getting his views on China shortly. Okay, coming up, moving towards an accord, stocks and futures gain as progress is made on lifting the US debt cap. Jamie Dimon says the limit should be removed altogether. We discuss next. This is Bloomberg.
morning, traders. I'm going to place two orders. First order I'm going to place for British pound at, as you remember, and you can see from our running ticker, we hold long position at 135.74.5. I'm going to place an order to sell if it will reach the level, if basically price will change direction and will go down. So I will place an order to sell at 135.84.5. So all of you guys who started and who purchased with me this pair, please place stop for this pair at 135.84.5. It will give us 10 pips. In your case, it will give you 10 pips as well. It's all about how much money you invested. Yeah. So we spend 100 pounds per 1 pip. So 10 pips will give us 1,000 pounds. Also, I'm going to place an order to sell short Bitcoin. The price I want to sell 54,914. Let me check again. It will be 54,000. Sorry, 916. Okay, I'm going to place in order to sell short 54,916. Where is it? It's right here. Okay. So all of you guys who want to trade Bitcoin, please place your order to sell. These days, Bitcoin very volatile. So if it's the price quite lower and away from the price I want to fill the order, it might happen just in a couple of minutes straight away. It can move up and then we'll move down. Okay, guys, stay safe.
Mitch McConnell's offer to raise the US debt ceiling into December. It alleviates the immediate risk of a default, but it also kicks the can further down the road. That's after Biden enlisted financial and corporate leaders to help him put pressure on GOP lawmakers.
If not, we're going to be defaulting on a debt that would lead to self-inflicted wounds that risk the market tanking and wiping out retirement savings and costing jobs.
Joining us now is Bloomberg senior editor Derek Warbank with the significance of this and what we really need to know about it, Derek. So this, what kicks this into the, I was going to say long grass. It's not particularly long grass, as it's just 2 months down the road. Kicks us into the pre-holiday build-up, pre-Christmas build-up. What do we need to know about this?
Well, no, I think that's exactly right. I think that you're looking at a 2-month easing of worries that hadn't really started to tick into the markets too much. But I think that people were just starting to pay attention to. It gives lawmakers a little bit more time to figure out how they're actually going to do this. And it kind of, I wouldn't say that it ends the problem. I would say it just pushes the problem, because really a lot of the underlying stuff here is still at play. A lot of the questions about how Republicans want Democrats to have to go through a certain procedure, put a number on the debt limit that would wind up being used against them in ads, won't provide support to get to a final vote without going through this whole sort of thing. All of that is still very much in play, but I think the critical thing for market watchers, especially in these hours and in places where it's daylight right now, is that you don't really have to worry right now that there's a problem with full faith and credit in the United States.
Okay, Derek Warbank, our senior editor, joining us with the latest in terms of that, at least short-term relief when it comes to the debt ceiling. And as Anna and Derek were discussing longer term, the risks, the concerns, of course, remain around the political wrangling. Mars Bradshaw, head of global aggregate fixed income strategies at JP Morgan Asset Management, is still with us. Mars, we're interested in your views on the political risks emanating from DC, but also the consequences then for the spending plans of the Biden administration, whether that is reconciliation and 3.5 trillion, likely to be reduced, of course, or the infrastructure bill, and to what extent markets should be thinking about how they price this support in or not.
Yeah, I think that the debt ceiling is just this bizarre situation, isn't it, where somehow the US Congress needs to approve a debt limit in addition to a spending limit. And I think we've been through this sort of movie many times. And I think from the market's perspective, the expectation is that a deal will be done on the debt ceiling. And the real issue is between the progressives in the Democratic Party and the moderates and agreeing the size of the infrastructure bill. Because once that's agreed, you then get the debt ceiling going through the reconciliation process, which means that the Republicans can't block it in the filibuster. And the debate there is at $1.5 trillion, which is the sort of the moderate line just taken by the West Virginian senator, or is it more like the $3 trillion Biden line? And I would expect that a deal will be done. It seems inevitable that a party that has a majority in Congress and the presidency must do a deal rather than shooting itself in the foot. And you would expect that you would find common ground on a smaller figure than a bigger figure. So something like $1.5 to $2 trillion seems most likely. And obviously now the deadline is likely to be pushed back to the end of the year. I'm not sure that's necessarily, I mean, it's better, it's good news, it's not bad news, but I'm not sure that's a game changer in terms of the deal. But yeah, my expectation is that a deal will be done probably towards the end of the year, lower figure rather than a higher figure.
Okay, so we'll see how it plays out. We'll put it to one side and worry about it, no doubt, again in December. Let me ask you about where you see value at this time then, Miles. We've talked a lot about higher savings rates in many Western countries as a result of the pandemic. For those that kept their jobs, were lucky enough to do that and then save a large amount of money. How do you tap into that from a strategy perspective?
Yeah, I mean, it's been the most unusual recession we've ever had, the deepest recession, one of the fastest recoveries. And when you look at data such as balance sheets, it doesn't seem to have been a recession at all. And I think that's the key point, is that actually we're in quite a strong position in terms of the economic cycle. We're at the early stages of the economic cycle. That means that we have the ability to weather quite a few shocks without derailing the recovery. And I think that's the main thing you need to think about when positioning your portfolios, because that means that corporate health is good. We're likely to get continued deleveraging of corporate balance sheets. And that means as a debt investor, you want to be owning those corporate assets and the expectation that defaults remain low. Interest rates is more tricky. Interest rates are going to go up and the market is pricing rate hikes. And we don't really argue with the timing of US rate hikes or the UK. The greater risk, as we discussed earlier, is inflation expectations rise. And so the pace of hikes may be faster. But the market which has already moved is China. Chinese monetary policy was tightened in the second half of 2020. You've got 10-year yields now 3%. You've got the economy slowing. So for me, owning interest rate risk is more attractive in China, where you've had an earlier tightening in the cycle, and owning credit risk in the US and Europe. That's the best way, I think, to be building a global portfolio.
Miles, thank you very much. I know that Tom wanted to ask you about China, and we were just running out of time, so I'm very glad you got to put your thoughts in about that. Miles Bradshaw, Head of Global Aggregate Fixed Income Strategies at JP Morgan Asset Management. Thank you very much for joining us. Let's get a Bloomberg Business Flash. Laura Wright joins us this morning with the latest on the European corporate news flow. Laura.
Thanks, Anna. The UK has ended a probe into British Airways and Ryanair over their refusal to reimburse customers when pandemic rules made flying illegal. While the Competition and Markets Authority says it strongly believes people should get refunds, it won't take any action as it says the law isn't clear enough. BA only offered customers vouchers or rebooking, while discounter Ryanair offered rebooking. The Carlyle Group believes firms are underinvesting in China. Speaking at the Bloomberg Invest Summit, CEO Hugh Sung Lee said many corporate and investment leaders are underexposed to the Chinese market. Lee added that the region's always had what he called short-term bumps, and investors should take a long-term view.
The question isn't, should I be investing in that region or not? It's really, what's the best way and how should we be doing it? And in my mind, I think there's more opportunity in that region of the world than not, especially since valuations have corrected a bit in that part of the world.
The easing of COVID restrictions in the UK is turbocharging the market for London finance jobs. In September alone, more than 2,800 new jobs were posted, marking the busiest month since at least January 2014. According to recruiters Morgan McKinley and data provider VacancySoft, third quarter postings more than doubled compared to last year's level. Tom, Anna, don't get any ideas.
Laura, well, it's good news for the City of London, certainly. Laura Wright, thank you very much indeed. OK, coming up, Boris Johnson skips over the UK's economic troubles to close out the Tory party conference with lots of gags. But is his sales pitch for a new Britain all show and no substance? We get the take from Bloomberg Opinion's Therese Raphael. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter, and I will always be a fighter inside and outside the ring.
The August jobs report packed a big downside punch.
That is a really, really dismal number.
Will September bring enough good news for the Fed to start a taper?
If progress continues broadly as expected, a moderation in the pace of asset purchases may soon be warranted.
Will unemployment keep going down? And what's happening with wage inflation?
It might be a little bit more sticky than maybe Jerome Powell and some of the Fed members think.
Tune in for the September jobs report, Friday on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Conservatives have never won in before, such as Hartlepool, and in fact, it's the first time since the general election of 2019 when we finally sent that corduroy communist cosmonaut into orbit where he belongs. We sent top government representatives to our sweatiest boîte de nuit to show that anyone could dance perfectly safely. Let's hear it for John Bon Jovi. When I was lying in St. Thomas's Hospital last year, I looked blearily out of my window at a hole in the ground. Amid the rubble of brick, they seemed to be digging a hole for someone or something, or indeed someone, possibly me. I give you AUKUS. I know there has been a certain raucous caucus from the anti-AUKUS caucus. It's become clear to me that this isn't just a joke. They really do want to rewrite our national story, starting with Hereward the Woke.
That was the UK Prime Minister Boris Johnson there, showing off his comedic chops as he wrapped up the Conservative Party conference. His speech was heavy on jokes, but light on specifics on how he intends to deliver on his vision for a new Britain as the country faces supply chain pain, labour shortages, and an energy crisis, of course. Joining us now is Bloomberg Opinion columnist Therese Raphael, and we put together deliberately a sort of nice highlights reel there of some of the funny bits, Therese. Slightly lightheartedly, irreverently, but to be fair, there weren't really any policy announcements to focus on. Well, there was one, I think, that our colleagues picked up on. That was intentional, perhaps.
Yeah, I mean, I think it was sort of a greatest hits of Boris Johnson. He's returned to the formula that has been so successful for him in the past, which is to sort of rise above the nitty-gritty of policy, the details, the conflicts, and, indeed the economic challenges of the day, which you would, find it pretty hard to have ignored yesterday, and paint this portrait of sunlit uplands, as a Brexit phrase went. It was what he called radical and reforming conservatism. But I think, as you hinted, behind that, there are real questions about what is conservatism now, and how does he unite these very two different strands of his party, the traditional conservatives, these are the older voters, the wealthier voters, who suspect that leveling up is really code for taxing the South to subsidize the North, and those northern voters that he won over in 2019 that he's going to need to keep in the tent, and he's going to need to show that his leveling up agenda can deliver for them. So that's why we heard a lot about higher wages and productivity, and the flip side of that is business has been blamed for a lot of the problems rather than government.
Yeah, how real is that disconnect, that divergence, that disagreement between Boris Johnson and his team and the world of business, which, of course, typically and traditionally, the Conservative Party were very aligned with the world of business. Now they're the whipping boy for Bojo and team. Is that a real disagreement?
Yeah, I mean, I think we have to take a lot of what happens during the conference season with a big grain of salt. There's a lot of theater. It's about rallying the grassroots. But there's also a strain here that is very consistent with what Boris Johnson has been telling business really since the Brexit campaign. And it's worked for him up until then. Now I'm not so sure. We now have, huge pressures on business from rising energy prices, from supply chain challenges, and he's going to need business on side to deliver on this agenda, and that's not going to happen by the kinds of things that hurt confidence of investors in business. So I think that's where he's got a challenge going forward. But it's a very convenient whipping boy, certainly during conference week.
Therese, Raphael, thank you very much indeed. Well worth checking out the opinion column by Therese, of course, on Bloomberg.com and on the terminal, that assessment of Boris Johnson, his vision, and how that doesn't really match up with reality, arguably. Coming up, Russia offers to alleviate Europe's energy crisis, but at a price. We'll discuss that next. The markets currently across Europe, you're seeing gains across the stock 600 of about 0.9%, coming off slightly, but still, of course, comfortably in positive territory. The CAC current is gaining more than 1%, as is the DAX. Plenty more ahead. This is Bloomberg.
Something wrong with her eye. When I had a look, it looked like she was blind. The vet that she's registered with were only doing telephone appointments, which was a bit pointless because she really needed to be seen by someone, and I couldn't get one anyway for like another week. I was just quite worried about, the complications of leaving it for so long.
We seen millions more animals becoming pets in the past year due to the people having increased time at home. What we're also finding is due to Brexit that we're having decreased numbers of European vets working over here. So unfortunately, we're unable to meet that current demand for pet services. Also, COVID's got the inevitable impact with people having to self-isolate.
It is very limited what we can diagnose, so it's more about peace of mind and determining whether they do need to be seen in person.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. We're 30 minutes into our European trading day. Here are your top stories. Debt ceiling progress. Democrats indicate they'll accept a Republican compromise to allow a short-term increase in borrowing, postponing the risk of default. Global stocks climb. The great gas reversal. Putin steps in, offering to ease Europe's energy crisis, but with strings attached. The move cools a surge in prices. And a Bloomberg scoop, the ECB is studying a new bond buying program to prevent market turmoil when pandemic support is phased out by the central bank next year. So, Tom, European equity markets then moving to the upside, up by more than 1%. We've got better news, or we had better news yesterday around gas prices, but also the debt ceiling, the mood music there, and the policy offering from the Republicans adding to that sort of positive mood for risk assets.
Yeah, it's been a choppy week, obviously, for markets, but you do have some catalysts, finally, for these markets. The big themes, of course, remain around inflation, around higher yields, but those catalysts on the geopolitical front, whether it's Biden and Xi Jinping, that planned meeting later this year, Vladimir Putin has promised to potentially look at increasing supplies of gas. And by the way, you're seeing UK gas prices coming off about 20%, but still, of course, at very elevated levels. And in the US, DC, and that agreement around, it seems like that agreement around the debt ceiling being pushed back to December, relieving and reducing some of that near-term risk in terms of the politics out of Washington. All of that feeding into the market moves today. The Asian session was very solid indeed. That continues. The MSCI Asia Pacific gaining for the first time in 5 sessions. Chinese tech stocks up strongly after a record low yesterday. Here across the European Stock 600, 30 minutes into your trading session here this Thursday, gains of 1%. Over in Germany, investors brushing off weaker data in terms of industrial production, gains of 185 points. The CAC 40 in France is up as well, at 1.2%, as you can see, and some positivity here in the UK as well. Even as markets start to price in, though, the potential of a rate hike by the Bank of England as soon as December on the back of these changing inflation expectations. Let's have a look at the sectors, of course. Top of the list, basic resources gaining 1.8%. At the bottom of the list, you've got energy, followed by travel and leisure. Travel and leisure still gaining 0.7%. That is how things are shaping up 30 minutes into the trading day here in Europe. Anna.
Now, Russia, let's get back to that story around gas prices then, Tom. And Russia is offering relief to Europe's gas crisis, but with some strings attached. After a chaotic day that saw benchmark gas prices rise 40%, President Vladimir Putin said that Russia could stabilize the problem by exporting record volumes of fuel to Europe. And while not explicitly mentioning the dormant Nord Stream 2 project, Putin did note that the current gas transportation route, which goes through Ukraine, was both more expensive and more polluting. Now, separately, Secretary of State Antony Blinken told Bloomberg that he hoped Russia wouldn't use the situation as a foreign policy tool.
Russia has, in the past, used energy as a tool, or some would say a weapon of its foreign policy. I hope that's not what we're going to see going forward, especially as we get to the winter.
Joining us now is our Moscow Bureau Chief, Tori Clark. And for the reaction in energy markets, we're also joined by Bloomberg's Helen Robertson. Tori, let me come to you first. Around a month ago, I remember we saw lines coming through from the Kremlin suggesting that, oh, gas prices are going higher in Europe. Maybe Russia could do something a little bit more. If only you'd open up that Nord Stream 2 pipeline. Maybe it wasn't being listened to enough because we needed to hear from the man at the top. So let's start with what Putin has said. What has he said that his government could actually do?
Putin said yesterday that Russia could help stabilize the market. And I think those comments were definitely spurred by the spiking prices. Russia doesn't necessarily benefit from chaos in the market. They want high, stable prices, and they want to be seen as a reliable partner. They also want to get certification for their Nord Stream 2 pipeline, and I think Putin saw this as a good opportunity to make a pitch to Europe to speed this up. The application process can take months, and Russia definitely wants to take advantage of the tough situation before the winter months to try to convince people to allow this pipeline project to go through.
And Helen, we saw, of course, gas prices coming off quite significantly on the back of these comments from Vladimir Putin. Walk us through the market reaction and what it means for prices in the at least short to medium term.
Hi. Yes, obviously yesterday was an incredibly volatile day with prices surging 40% in Europe, 60% in total over a 2-day period. And then obviously after President Putin's comments, they came down, those prices came down again immediately. Obviously, as Russia sought to, sort of alleviate market fears of supply tightness. And then this morning, obviously, the slump has sort of continued somewhat. U.S. natural gas futures have extended losses, and that was after a 10% drop. In the UK, prices are currently down about 18% this morning. So obviously, Russia's comments have had an immediate impact. But obviously, the situation remains that European storage levels are at a decade low, where it's had, obviously, as we know, a knock-on impact on other energy markets. And so we're still in a very tricky spot.
And Helen, thinking about what Russia is offering here, would the Russian offer, whether it comes, and it looks as if it would come via Ukraine, if timing is important, because certainly Nord Stream 2 might take some time to open up, but would what Russia is offering, would it be enough to shore up the European supply over the winter, or do we not know enough about how much more than their contractual obligations they're willing to send?
I think at this point we just don't really know enough. We know Russia has said that they're prepared to export record volumes of gas this year. Volumes slumped a little in September, I believe. But as I said, I mean, this is not just now a gas crunch. This is a global energy crunch. And, as I've mentioned, it's had a knock-on impact on other markets. And obviously, the other thing that's happening as well with Russia is that its domestic gas demand, we now know, basically is higher than it has been previously. So Russia's immediate priority is essentially going to be catering for its own domestic demand before it looks at exporting volumes elsewhere.
Tori, Anna, of course, touched on this, and rightly so, around Nord Stream 2, and whether or not Russia, Moscow, is using this ultimately as a bargaining tool. Do we get a sense that that is the case?
It does seem that way. Russia, as I said, wants to be seen as a reliable partner. As Helen says, Russia is going to take care of itself first and make sure its own storage is full. Gazprom has hinted that a cold winter may be coming to Russia. They've got a lot of bargaining chips, and Putin has wanted to have Nord Stream 2 online, and this seems to be the moment that they can try to press that advantage.
Okay, thank you to our Moscow Bureau Chief, Tori Clark, and Energy Report's Helen Robertson on the important dynamics emanating from Moscow and, of course, how that plays in to the energy story. Okay, let's get the business flash now, the Bloomberg Business Flash with Laura Wright. Laura.
Thanks, Tom. The easing of COVID restrictions in the UK is turbocharging the market for London finance jobs. In September alone, more than 2,800 new jobs were posted, marking the busiest month since at least January 2014. According to recruiters Morgan McKinley and data provider VacancySoft, third quarter postings were more than double last year's level. The first vaccine for malaria is set to be deployed more widely after more than 3 decades of work. Developed by GlaxoSmithKline and its partners, the shot had been recommended by the WHO for use in children in sub-Saharan Africa and other regions with moderate to high transmission. The vaccine prevented only about 4 in 10 cases in a large study, but deployed widely, it could still reduce the 400,000 annual deaths from the disease. Hackers have attacked Amazon's video game streaming platform Twitch, leaking critical data, including source code and the earnings of its top gamers. The leaks purport to include streaming histories, a game studio's product under development, and a document showing Twitch's top gamers rake in 6-figure payouts up to $9.6 million for the highest grossing account. That's the Bloomberg Business Flash. Tom, Anna.
Thanks very much for that, Laura. Laura Wright there with your Business Flash news. Now, coming up on the programme, more from our interview with the US Secretary of State Antony Blinken as he criticises China's recent military manoeuvres around Taiwan. He's been urging leaders in Beijing to stop such behaviour for fear of a miscalculation. We hear more from him next. This is Bloomberg. Blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours, and renewables. We have a very strong climate component in our government and in our government programme, and that, of course, is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah, drop the bow tie. Drop the bow tie.
What, skinny tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie. The older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open. We are 42 minutes into the European trading day. Stocks here in Europe are gaining, still up 1%. Top of the list in terms of your regional benchmarks are the DAX gaining 1.3%, brushing off some weaker data in terms of industrial production.
Let's get to some breaking news lines coming through from the ECB. We've been speaking to the ECB Governing Council member Yanis Stounaris. Our colleagues have been talking to him in an interview for Bloomberg Television, which we'll bring to viewers later, of course. The ECB Stounaris saying that market rate hike views don't reflect guidance. So perhaps a suggestion here that if we're seeing rate hike expectations building, maybe that's the global story. If that's happening in Europe, that doesn't reflect the guidance that we're getting from the ECB. He is saying that asset purchases aim at favourable financing conditions. He's sure the Governing Council will continue to aim for this. For the moment, we see no need to change the stance on monetary policy. So maybe if you had hawkish expectations around Europe, then the market dialing those back just a touch. You can see the euro has come off just a fraction as a result of that red headline, but not all that much, Tom. But what we have seen a great deal of movement in has been technology shares, in particular through the Asia session.
Yeah, absolutely. So it's worth noting in terms of the context that yesterday Chinese technology stocks listed in Hong Kong and the mainland markets remain closed. They hit a record low yesterday. Today, you're seeing gains across the HSI, of which technology makes up a significant chunk. HSI is gaining 3%. In terms of the technology shares, you're seeing some very solid gains for the big name companies like Meituan, gaining almost 10%. NetEase is near the top as well. Kuaishou Technology, the video streaming company, gaining more than 8%. So a turnaround. What you haven't heard, of course, from regulators are any new initiatives in terms of the squeeze on technology. So that's one factor you would assume. But also this is likely dip buying, given just how low these stocks fell yesterday. The opportunities clearly for some investors there. So solid gains across the tech space in Hong Kong, and that's flooding across to the Asian session, Anna.
Yeah, absolutely. So those are the Hong Kong listings, and we'll keep an eye as things open up in China as the Golden Week comes to an end. Keep an eye on those markets, of course. And sticking with the China theme, President Joe Biden is planning to hold a virtual meeting with China's Xi Jinping before the end of the year. Among the possible items on the agenda, trade and rising tensions over Taiwan. Secretary of State Antony Blinken has criticised Beijing's actions toward Taiwan, saying they're provocative and destabilising. He spoke to Bloomberg's Francine Lacroix, who started by asking about the phone call between Presidents Biden and Xi last month.
They spoke on the phone just a few weeks ago and had a productive conversation covering a lot of issues. And they, whether they'll have occasion to get together in the weeks or months ahead, we'll see. They're likely to both participate in some fashion in the G20 meeting, for example. But they had a good, productive conversation, and will continue the work that they set out.
We've seen incursions of Chinese plane in Taiwan. Is there a red line that you think President Xi will not cross? Does he understand a red line, or are tensions high?
Look, the actions we've seen by China are provocative and potentially destabilizing. So what I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous. So in the past, we've managed to handle the issues surrounding Taiwan in a way that's actually sustained stability. Provocative actions go in exactly the wrong direction, and it's very important that no one take any unilateral actions that change the status quo by force. And so we really need to see China cease some of the actions that it's taken, because they are potentially a source of instability, not stability.
And so the U.S. needs to take a hard line, but at the same time trying to find a common agreement when it comes to climate change.
Well, there are many issues in the relationship between the United States and China. It is one of the most consequential relationships in the world. It's one of the most complicated relationships in the world, and it has different aspects to it. There is certainly a competitive aspect that we know very well. There are adversarial aspects. There are also cooperative aspects. And we have to be able to deal and engage in every single one of these aspects of the relationship. At the same time, climate happens to be an existential issue that affects everyone on the planet, whether it's the United States, whether it's China, whether it's any other country. And China, like the United States, has great responsibility when it comes to dealing effectively with climate change. We're about 15% of global emissions. China is 36, 37% of global emissions. And so it's important for both of us to step up and meet our responsibilities. And that means having ambitious targets for how we're going to actually curb climate change. It also means making sure that we're contributing to help others deal with resilience, to deal with adaptation. And it means taking important steps like, for example, moving away from coal.
Secretary, there's a lot of focus, of course, on how the Chinese authorities are dealing with Evergrande. What does it tell you about Chinese stewardship?
Well, look, China has to make sovereign economic decisions for itself. But we also know that what China does economically is going to have profound ramifications, profound effects on literally the entire world, because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
And that was, of course, Secretary of State Antony Blinken speaking to Francine Lacqua in Paris. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. Democrats have signaled that they will accept Senate Republican leader Mitch McConnell's offer to raise the U.S. debt ceiling into December. The deal would alleviate the immediate risk of a government default, but raises the prospect of another political fight near the end of the year. Earlier, President Biden enlisted corporate leaders to make the case that a default would tank the wider economy. Bloomberg has learned the ECB is studying a new bond buying program to prevent any market turmoil when emergency purchases are phased out next year. According to sources, the plan would replace the existing crisis scheme and complement an older, open-ended QE program that's currently buying 20 billion euros in debt every month. The UK has ended a probe into British Airways and Ryanair over their refusal to reimburse customers when pandemic rules made flying illegal. While the Competition and Markets Authority says it strongly believes people should get refunds, it won't take any action as it says the law isn't clear enough. BA only offered customers vouchers or rebooking, while discounter Ryanair offered rebooking. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Anna.
Laura, thank you. Laura Wright here in London. Coming up on the programme, a Bloomberg scoop. The ECB is studying a new bond buying programme to prevent any market turmoil when emergency purchases are phased out next year. We'll get into the market impact with our M-Live team, the Markets Live team. They'll be with us next. This is Bloomberg.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm not surprised to see this most recent retreat and correction that we've been going through.
Certainly China has already gone through a bit of a correction. Their plan is to be a superpower, and they're moving consistently in that direction. So we do think it's investable.
Diversification is key in an environment like this.
Being at least somewhat better diversified geographically.
You have to pivot, you have to change, you have to be agile.
Active management, I think, is going to be more important in the next decade in the past.
We've seen a dramatic growth in allocations to privates.
Anybody who's on the sidelines underallocated to alts pre-pandemic and saw the performance. With this reopening, we're just seeing a real resurgence in demand.
It has never been more punitive to hold cash.
If the inflation piece falls over, the whole thing falls over.
The problem is stagflation. That's the real risk.
There's no answers to it yet, but we should expect to see continued volatility.
Some top investors there speaking to us on day 2 of the Bloomberg Invest Global Conference. Really interesting thoughts collected together, pointing to the importance of diversification amid inflation risk and volatility. Let's get into a conversation about where we are on these markets. 53 minutes into our European trading day, and Ven Ram from our Markets Live team joins us. Ven, a very good morning to you. Let's start with this Bloomberg scoop then about the ECB considering a new bond buying program, looking at Italian bonds extending gains. We are seeing some movement. Is this connected? Are we seeing this having an impact on markets, or is this just nice for those of us who watch the ECB story closely to think about?
No, it's going to have a real impact on the markets. As we are seeing, peripheral spreads are already closing in. This is going to be supportive of peripheral bonds, particularly Italy and Greece, that have benefited big time from the ECB's purchases. Now, the ECB, these news leaks, these selective news leaks, will continue into the final quarter and into the first quarter of next year, because the ECB wants to suss out the market reaction to what it may eventually do. Now, what we do know is that, look, the ECB is going to be in the market for a long, long time. That was already known, so it's not a complete surprise to the markets. But what they're essentially saying is we are going to go from a position where we are in the markets all the time to we will be in the markets when the markets need it. That is when peripheral spreads blow out. So that's essentially what they are saying with this news story.
Okay, so that's on the back of this ECB bond buying plan. And there's a really important piece as well on the MLive, Ven, that you and the team have been working on around inflated or inflation-adjusted earnings for US stocks. Some really key takeaways here. What stood out for you when you crunched the numbers?
So what we got when we crunched the numbers, Tom, is that, if you adjusted for 1 year forward-looking inflation pricing, what we get is a real yield or earnings yield on the S&P of about 165 basis points. That's near the lowest it's ever been in Bloomberg data that's going back to 2011. So that has quite a bit of significance, because what the markets are essentially saying is, look, even though inflation is on the uptrend, we are not going to compensate you in terms of stocks. In terms of the risk you're taking, we are not going to pay you very much. And that's not a great position for stocks to be in. So stocks are very richly priced. And we have passed it from so many angles in previous iterations, where we looked at it in terms of economic output and what have you.
That's really interesting, because we hear the Tina argument used around owning stocks, don't we? But you're suggesting that maybe that's not the appropriate alternative. Ven, thank you so much. Ven Ram from our Markets Live team. Thank you very much for joining us.
Yes, and before we let you go, the stocks Europe 600 across the region, you've got some optimism. It continues to sustain itself. 56 minutes into the trading session here, gains of 1%. Anna, we were talking about the catalysts earlier that we're seeing now. Despite the big themes around inflation remaining, of course, you do have on the geopolitical front some optimism, and in terms of the politics out of Washington as well, Anna.
Talking of politics, important to note, energy stocks, the weakest performing sector in Europe today. Lines crossing, though, from Russia's Sorokin, the energy minister there, about OPEC Plus and its role in oil prices. Look that up on the Bloomberg terminal. This is Bloomberg.
China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, part delays, chip shortages, settled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
How did you make the decision to move to the Bahamas of all the options out there?
We've been looking at the Bahamas for a while. They're one of the first countries to roll out any comprehensive regulation for cryptocurrencies, which we think is extremely important for the space and a really positive sign.
The high energy prices we're seeing now reinforce a few things. They reinforce the need for a transition to new forms of energy.
We should get rid of the debt ceiling. We don't need to have this kind of brinkmanship every couple of years.
If it doesn't, we're going to be defaulting on a debt that would lead to self-inflicted wounds that risk the market tanking.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Progress on the debt ceiling. Democrats indicate they'll accept a Republican compromise to allow a short-term increase on borrowing, postponing the risk of default.
Okay, traders, morning again. As you can see, we sold British pound. So well done, guys, who decided to follow me, stay with me, and we purchased yesterday this pair, British pound against United States dollar, and we sold it with 10 pips in front, above our entry price. We have £1,000 in profit. So well done, guys. For you guys, it's all about how much you decided to invest when you trade in these pairs. Stay with me. Let's move on. Let's see what other, this week kind of slow week for you guys. We're quite busy because we have other trades, but what we show you on the streamer are quite kind of slow, as you can see. But if you want to trade other pairs, you don't have to wait and see when we'll change once in a while the screen. You can get the strategy and you can learn it, and you can use to trade indices, Forex, Dow Jones, shares, anything, all basically companies that very tradable. What I mean by saying that many people, if lots of trades happen within 1 hour, let's say 2-3 million trades within 1 hour, yep, this stock is tradable, so you can trade and use our strategy as well. Okay, stay safe. I'll speak to you later. Well done. Well done, guys, especially new people who decided to use our strategy and follow me. Stay safe.
I think it's going to be more important in the next decade in the past.
We've seen a dramatic growth in allocations to privates.
Anybody who was on the sidelines underallocated to alts pre-pandemic and saw the performance with this reopening, we're just seeing a real resurgence in demand.
It has never been more punitive to hold cash.
If the inflation piece falls over, the whole thing falls over.
The problem is stagflation. That's the real risk.
There's no answers to it yet, but we should expect to see continued volatility.
Well, joining us now is Mervyn King, Lord King. He was the Bank of England governor between 2003 and 2013. Since then, he's been a professor at the New York University Stern School of Business. Since 2018, he's also been a contributor with Bloomberg Opinion. So fabulous. Thank you so much for joining us, Lord King. I have a million questions to actually ask about the economy, about some of the pitfalls, supply chains, inflation.
Well, good morning, Francine.
Good morning to you. What do you see as the biggest concern for central banks right now? Is inflation really transitory, or is there a risk that because we believe it's not transitory, it actually becomes sticky?
I think central banks are really worried about inflation now. Much of what we see probably is transitory, but nevertheless, it's a lot easier to see upside risks to inflation than downside risks. None of us know where inflation will go over the next year or so, but upside risks are coming, I think, from three sources. One, as we gradually learn to live with COVID-19, the bottleneck effects are pushing up some prices. Secondly, energy prices, we've seen, even yesterday, they moved all over the place for gas prices. We don't know where they'll go, but it's much easier to see upside risks than downside risks. And third, and I think one which is very different from the past 20, 30 years, is that the political risks are also much stronger. There's real pressure now to boost public spending, but not to raise taxes to finance it. And as interest rates start to rise, market rates are going up, policy rates will follow. Politicians will be nervous about the impact of that on their financing costs. All of that will make it much more difficult for central banks not to fall behind the curve.
So what should they do, Lord King? I mean, it's great to speak to you also with, the history that you've had at the Bank of England. In 2011, inflation was at 5%.
So much stronger.
You left interest rates at 0.5%. I mean, how do you view, if you were in charge now, what would you do?
I think the most important thing is to keep options open. I think they should abandon forward guidance. I think that's been a big mistake in the last few years. The Federal Reserve has been saying for some while that it will keep rates low for a long while. Perhaps not even raise rates until 2023, 24. All central banks have suddenly changed their language, and that's to be welcomed. But you can see why they're reluctant to do it, because it means abandoning what they were saying before. And the important thing now is not to pretend that we know what will happen in the future, but to demonstrate that central banks are willing to respond very quickly if those upside risks materialize.
So, Lord King, how quickly should the Bank of England move, given where we are?
Well, I'm not going to give advice to the bank as to what it should do. The main thing is that I think it is now clearly alert and very much on the ball of thinking about what's going to happen to inflation. And we've seen that inflation can move really pretty quickly outside the control of the central bank. So all these attempts to revise frameworks for monetary policy, average inflation targeting, just out of the window, basically, because the idea that you can gradually control inflation to let it go above target a little bit for a short period and then bring it back doesn't square with what happens in the real world. So I think being alert to the data, some of the upward pressures will be transitory, but the real risk is that it gets embedded into upward pressure on wages. That's going to be the thing that central banks will focus on.
I mean, we're also really trying to understand what's happening with house prices here in the UK. I mean, they've been a little bit all over the place with some, upward pressure. How do you see it?
Well, who knows where house prices will go, but they are reflecting a mixture of things. The most important challenge, I think, for policymakers, both central banks and governments, over the next few years, is the need to recognize that there'll be significant reallocation of resources within the economy. We're dealing with a period now of greater structural change, and that makes it less easy to think about just the growth rate of GDP or what is happening in aggregate. It's the changes in the structure of the economy that will matter, and you can see that most clearly in the United Kingdom with the strategy of leveling up, trying to shift resources from the pressured southeast to the Midlands and the north. How this will be brought about is unclear, but it's clearly a major objective of policy, and that will imply structural changes in the economy.
So what is the biggest concern right now in terms of, readjusting this economy? What will the UK economy look like in 5 years? How difficult is it to answer?
The market will tell us what the economy will look like in 5 years' time. It'd be a big mistake for the government to try to predict. For example, how do we know how large the airline industry will be 5 years from now? Will it get back to where it was, where it would have been expected to be before COVID-19, or will it be significantly smaller? We don't know, and we shouldn't pretend to know. The market will tell us over a period of time. The important thing is to make sure that resources can easily move from one sector to another. And I think that will create quite big challenges in a number of zombie companies that have been supported by low interest rates, suddenly finding that they're going to have to own up to the fact that they can't repay all their debt. That is a good thing in the sense that it will enable resources to shift to sectors that are more profitable, but it will give us a big challenge in restructuring those debts in the meantime.
Lord King, do you have an idea of how many zombie companies we could be looking at?
No, but I think it's a global...
How do you manage?
I think it's a global phenomenon, and I think the big challenge is that we haven't really had to deal with large numbers of companies, or for that matter, large numbers of sovereign indebted countries, all needing to restructure their debt at the same time. We don't really have an infrastructure to cope with that, and I think this is going to be a significant concern in the next few years.
Significant, could be systemic if it all comes at once, that we should be, spending a lot more time on?
Well, I think it could be systemic in those parts of the world where the banking system is less robust and less resilient. I think that means the continent of Europe in part, but also some parts of Asia. We've seen in recent weeks concerns about Chinese indebtedness and the size of their real estate sector expand to the point where people around the world are worried about the consequences of that.
Do you worry? I mean, you're talking about Evergrande and Fantasia.
Evergrande and others that may follow in the wake. I think we should be concerned.
You lived through Lehman. Could this be a Lehman moment?
I don't think it's a Lehman moment in the sense that, a major financial institution at the heart of the world economy in the G7 and at the heart of the payment system domestically is threatened. No. But I do think it could lead to significant strains and stresses in the financial system around the world, which will lead to rises in interest rates, and that will pose problems for governments and businesses and households alike.
Lord King, thank you so much. Lord Mervyn King, their former Bank of England governor, stays with us, and we'll talk a lot more about some of these zombie companies and also other parts of the world. In the meantime, we're talking a little bit about inflationary pressures, of course, coming from energy, but also the UN World Food Price Index climbing at the highest in a decade. Now, this has huge implications, especially for the emerging markets. It's a societal concern that we have to address, and we'll talk a lot more about that. Coming up, Boris Johnson paints a future of Britain of high wages and high productivity, but can he keep his ambition with inflation? We'll focus in on that next with Mervyn King. This is Bloomberg.
What have we learned from this Evergrande crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue is like a buyer strike. because of the sentiment. The Evergrande is hurting the sentiment, and people don't want to buy. And other developer, because they want to get cash.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Russia has, in the past, used energy as a tool, or some would say a weapon of its foreign policy. I hope that's not what we're going to see going forward, especially as we get to the winter.
Secretary of State Antony Blinken there telling me that he hoped Russia would not use the situation as a foreign policy tool. His comments came as Vladimir Putin offered relief to Europe's gas crisis. Now, after a pretty chaotic day that saw benchmark gas prices rise 40% yesterday, the Russian president said that he could stabilize the problem by exporting record volumes of fuel to Europe. Here in the UK, the price rises are being felt by investors. One gauge of national inflation expectations topped a 13-year high yesterday. The 10-year break-even rate also hitting 4%, twice the Bank of England's target, adding additional pressure for the UK central bank to take monetary policy action. Well, let's get back to the former Bank of England Governor, Mervyn King. He's still with us. He's also the co-author of Radical Uncertainty, Decision-Making Beyond the Numbers, a book about the pitfalls of mathematical models in economics, which, Lord King, is probably one of the most important, actually, points on how we measure things. And if you don't have the right data, if you don't look at things the right way, then it's difficult to have the right policy reaction. When you look at energy prices, Lord King, and when you look at actually what's been happening over the last couple of weeks, is this chronic underinvestment in our old economy, and are we going to see many more shocks like this?
I think it reflects a rather incoherent energy policy, both in the UK and right across Europe. And I think Europe has become very dependent on Russia for natural gas. And I think in the rush to pretend that we can rely very quickly on renewables, we've left ourselves exposed, as we've seen this year. So that's a definite problem, and it's a supply-side problem which only governments can really get to grips with, and I hope they do. But for the moment, what we're going to be seeing, I think, is not just rising prices, but very volatile prices, and that makes it extremely difficult to plan, whether it's households deciding what heating system to use or what businesses will do. That's, I think, the big problem, the sheer uncertainty introduced by the lack of a coherent policy framework.
So how much of a shock could it actually be to GDP, but actually to companies? We're looking at it through the lens of inflation expectations. Yes. Should we look at it more as an impact on the real economy?
Well, we don't know what will happen, but the risk, I think, is that incomes will be squeezed through higher prices, partly through higher energy prices, but also other higher prices coming from some of the problems as we come through COVID-19. And those higher prices, even though they may be transitory increases, will nevertheless lead to higher wage pressures. And employers trying to re-establish themselves after COVID-19 will give in to those wage pressures, wages will rise, and that will lead to a further stage in the inflationary process. And of course, this is what we've seen in the past. And each time the temptation was to say, oh, it's transitory, it's a one-off thing, we can get on top of this. But one stage leads to another, and you end up with an inflationary spiral. That has to be the risk. Now, it's only a risk, and much will depend on central bank action. But the central bank action may need to lead to rather unpleasant consequences for demand and output if they're to keep on top of the inflationary problem.
How unpleasant? So what are we?
Well, I think the longer that central banks delay their action, the more they would have to do to take control of the rise in inflation. And that runs the risk that if they have to do more down the road than they would do if they acted earlier, then you run the risk of slowing the economy, and at the extreme case, turning the economy into a downturn again. Those are the risks. And of course, we're moving into this very uncomfortable period in which if energy and food prices rise sharply, And if there is a need to pay higher wages to attract certain kinds of workers, then that is going to lead to higher prices, and it cannot lead to a second round of further wage increases to offset it unless you're going to end up in an inflationary spiral. So keeping the lid on wage increases in general while allowing wages in certain sectors to rise is going to be very important.
Lord King, we also spoke to the Bank of Greece governor, and he was talking about, the inflation situation being under control, whilst at the same time markets mispricing possible interest rates.
I will not rush to say that we have stagflation now. The situation is still under control. It is true that we are in the midst of a perfect storm. Bottlenecks due to the pandemic, higher energy prices, gas prices are up 500% since the beginning of the year. Electricity prices are up 250% since the beginning of the year. But despite that, our forecast, the ECB forecast, the OECD forecast, the IMF forecast, is that inflation will exceed 2% this year, but next year and the year after, that is in the medium term, it will fall below 2%.
That was the Greek Central Bank Governor Yannis Stornaros there speaking to Bloomberg. Lord King, is this a mathematical problem on how we measure inflation, or is it just because we're in extraordinary times?
It's because we're in very difficult times. I thought the Greek governor summarized the problem very accurately, but to rely on forecasts as a salvation is not a wise thing to do. I remember at the Bank of England when we would see forecasts for inflation, they'd always come back to the target. Why? Because that's what we'd said would happen. It was a circular process. Central banks have to be willing to take the action and to be seen to be willing to take action if it's going to be credible that inflation will fall back to the target. And that's a difficult thing to achieve when you may face a very unpleasant trade-off between slowing the rise in inflation and trying, on the other hand, to encourage a recovery in activity.
But especially if you're not listening to your own economists and own forecasts.
Well, I think the difficulty with forecasts is that there's enormous uncertainty about it, particularly in present circumstances. COVID-19 was not a normal business cycle, and much of the language that's been used about rates of decline of output and then rates of recovery, I think has fallen into the trap of not realizing that demand and supply fell together, then rose together, fell again, and now are recovering together. None of that led to a very large output gap opening up. And I think it's a mistake for people what you need to do is to look at what's happening on the ground, ask what's going on here. That was what Alan Greenspan was so successful at doing for a long while. And I think we need to get back to that, not just relying on forecasts, which in the medium term always come back to where you want them to come back to.
Lord Mervyn King, thank you so much, as always, for making a bit of time to come and speak to us on Bloomberg, the former Bank of England governor there with some pretty sharp analysis of where inflation will go. Coming up, we hear more from the U.S. Secretary of State, Antony Blinken. He says China should cease its actions towards Taiwan. That's coming up next, and this is Bloomberg.
So the 1972 Madison Square Garden eyelet jumpsuit, which is arguably, from what we're finding out, probably one of the most important jumpsuits of Elvis's entire career. So it marked so many milestones really for him. It was used for an album cover. It was used when he performed Madison Square Garden, and he was the first performer to ever sell out 4 nights straight in Madison Square Garden. So he really started that whole thing that we see now in pop culture, where when you make it big, you do Madison Square Garden. So we're super honored to have it. I can honestly say that COVID has been unbelievable for internet-based and e-commerce businesses, because we have a captive audience. We have people home that really want something to do and need entertainment, so we do our best to try to give it to them.
Who are U.S. Open tennis champion Emma Raducanu's 3 dream dinner guests?
Daniel Ricciardo, Michael Jordan, and Tom Keane from Bloomberg.
She understands you.
Funny and very understandable.
I am reading in on tennis like nobody.
Champion approved Bloomberg surveillance. Mornings on Bloomberg Television and Radio.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Russian President Vladimir Putin has intervened in the energy market, offering to stabilize Europe's gas crisis and saying Russia could potentially export record volumes of the fuel this year. His deputy leader quickly said that he would certify this controversial Nord Stream 2 pipeline and would be one way to boost gas exports. European natural gas futures plunged on Putin's remarks after earlier hitting record highs. Bloomberg has learned the ECB is studying a new bond buying program to prevent any market turmoil when emergency purchases are phased out next year. According to sources, the plan would replace the existing crisis scheme and complement an older open-ended QE program that's currently buying 20 billion euros a month in debt. President Biden plans to meet virtually with China's Xi Jinping before the end of the year. Plans for the meeting were announced after talks in Zurich between the White House National Security Advisor and the senior Chinese foreign policy advisor. The U.S. official called the latest discussions more meaningful and substantive than previous meetings. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Now, coming up, moving towards an accord, will stocks and futures gain as progress is made on lifting the U.S. debt cap? Jamie Dimon says the limit should be removed altogether. We discuss that next, and this is Bloomberg.
OECD nations need to end coal use by 2030, developing nations need to follow suit by 2040,
And we need coalitions of solidarity between countries that still depend heavily on coal and countries that have the financial and technical resources to support transitions, because it is essential that no more coal power plants are built.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Progress on the debt ceiling. Democrats indicate they'll accept a Republican compromise to allow a short-term increase on borrowing, postponing the risk of default. Anthony Blinken slams China over its recent military maneuvers around Taiwan. We'll hear from our conversation with the U.S. Secretary of State later this hour. And an exclusive conversation with Mervyn King, the former Bank of England governor, tells his program that it's important for central banks to keep their options open, but that any action they take may be painful. Well, good morning, everyone. Happy Thursday. I'm Francine Lacqua in London, and welcome to Bloomberg Surveillance Early Edition on this Thursday, the 7th of October. Now, U.S. Democrats have indicated that they'll accept Mitch McConnell's offer to allow a short-term increase to the government borrowing limit into December. A Senate vote is possible today, but the deal merely postpones the default risk until the year end.
We're making good progress. We're not there yet, but I hope we can come to an agreement tomorrow morning.
All right, let's get to the latest with our very own Danny Berger, also my co-anchor for the next hour. Danny, first of all, I mean, we could see a vote as soon as today. How much of a victory is this for the Democrats?
Well, the Democrats have certainly claimed this as a victory. Of course, as you mentioned, this is essentially just kicking the can down the road, and it doesn't even really clear Christmas. So it doesn't solve this fundamental issue. So it puts Democrats in kind of a difficult position that they're going to have to retake this up, and essentially they either need Republicans to capitulate or they're going to have to really put an exact number to the debt ceiling. And that could potentially be embarrassing for them, to put it in simple terms, because Republicans can use that in their GOP campaigns against them when midterms rolls around. So yes, it's a delay for now, but it's just an off-ramp to more troubles potentially in 2 months from now.
I mean, the markets are really taking in their stride.
Yeah.
Is it just because it pushes the can down the road so they don't want to worry about it now?
I think in some ways it kind of just added to this more positive mood music at the end of the day yesterday. We had, of course, the energy news from Russia, which helped markets. But you and I have talked to plenty of people who say, okay, markets always expect this will work out. It's not priced in. Well, it seems that to some extent it must have been priced in if we have this very positive reaction. I will say, if you look at short-dated paper, which is what we're looking at now, yields on that did spike. It has come back down. But it might just be investors don't know where to price this now. They don't know what the X date is, the so-called X date. That will be the risk event. So they've just kind of not really sure what to do with it, and that might be why we're seeing markets react the way they are.
Danny, thanks so much. Or Danny Berger there. Danny will be, of course, joining me from 10 a.m. for the second hour of Bloomberg Surveillance Early Edition. Now, President Joe Biden is planning to hold a virtual meeting with China's Xi Jinping before the end of the year. Among the possible items on the agenda, trade, rising tensions over Taiwan. The Secretary of State, Anthony Blinken, has criticized Beijing's actions toward Taiwan, saying they're provocative and destabilizing. Well, he spoke to me yesterday in Paris, and I started by asking him about the phone call between Presidents Biden and Xi.
They spoke on the phone just a few weeks ago and had a productive conversation covering a lot of issues. And they, whether they'll have occasion to get together in the weeks or months ahead, we'll see. They're likely to both participate in some fashion in the G20 meeting, for example. But they had a good, productive conversation, and will continue the work that they set out.
We've seen incursions of Chinese plane in Taiwan. Is there a red line that you think President Xi will not cross? Does he understand a red line, or are tensions high?
Look, the actions we've seen by China are provocative and potentially destabilizing. So what I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous. So in the past, we've managed to handle the issues surrounding Taiwan in a way that's actually sustained stability. Provocative actions go in exactly the wrong direction, and it's very important that no one take any unilateral actions that change the status quo by force. And so we really need to see China cease some of the actions that it's taken, because they are potentially a source of instability, not stability.
And so the U.S. needs to take a hard line, but at the same time trying to find a common agreement when it comes to climate change.
Well, there are many issues in the relationship between the United States and China. It is one of the most consequential relationships in the world. It's one of the most complicated relationships in the world, and it has different aspects to it. There is certainly a competitive aspect that we know very well. There are adversarial aspects. There are also cooperative aspects. And we have to be able to deal and engage in every single one of these aspects of the relationship. At the same time, climate happens to be an existential issue that affects everyone on the planet, whether it's the United States, whether it's China, whether it's any other country. And China, like the United States, has great responsibility when it comes to dealing effectively with climate change. We're about 15% of global emissions. China is 37% of global emissions. And so it's important for both of us to step up and meet our responsibilities. And that means having ambitious targets for how we're going to actually curb climate change. It also means making sure that we're contributing to help others deal with resilience, to deal with adaptation. And it means taking important steps like, for example, moving away from coal.
Secretary, there's a lot of focus, of course, on how the Chinese authorities are dealing with Evergrande. What does it tell you about Chinese stewardship?
Well, look, China has to make sovereign economic decisions for itself. But we also know that what China does economically is going to have profound ramifications, profound effects on literally the entire world, because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
Secretary of State there, Antony Blinken, speaking to me earlier in Paris. Now, coming up, Europe's startup scene will be joined by the founder of Moonfire Ventures to discuss why European tech is just the best place to invest right now. Matthias Lungman coming up shortly. This is Bloomberg.
第18条第2項におり、本院において 内閣総理大臣に指名することにこの際暫時休憩いたします。
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. The easing of COVID restrictions in the UK is turbocharging the market for London finance jobs. In September alone, more than 2,800 new jobs were posted, marking the busiest month since at least January 2014. According to recruiters Morgan McKinley and data provider VacancySoft, third quarter postings were more than double last year's level. The UK has ended a probe into British Airways and Ryanair over their refusal to reimburse customers when pandemic rules made flying illegal. While the Competition and Markets Authority says it strongly believes people should get refunds, it won't take any action as it says the law isn't clear enough. BA only offered customers vouchers or rebooking, while discounter Ryanair offered rebooking only. The first vaccine for malaria is set to be deployed more widely after more than 3 decades of work. Developed by GlaxoSmithKline and its partners, the shot has been recommended for use by the WHO in children within sub-Saharan Africa and other regions to moderate high transmission. The vaccine prevented only about 4 in 10 cases in a large study, but deployed widely, it could still reduce the 400,000 annual deaths from the disease. The Carlyle Group believes firms are underinvesting in China. Speaking at the Bloomberg Invest Summit, CEO Hyu-Sung Lee said many corporate and investment leaders are underexposed to the Chinese market. Lee added that the region's always had what he called short-term bumps, and investors should take a long-term view.
In that region or not, it's really what's the best way and how should we be doing it. And in my mind, I think there's more opportunity in that region of the world than not, especially since valuations have corrected a bit in that part of the world.
That's the Bloomberg Business Flash, Francine.
Laura, thanks so much. Now, Matthias Lungman has spent 20 years investing in European startups, including Klarna, Supercell, and Viagogo. Earlier this year, Matthias launched Moonfire Ventures, a $60 million fund hoping to capitalize on what he calls Europe's tech renaissance. Well, I'm delighted to be joined in the studio in person by Matthias Lungman. Matthias, great to speak to you. Thanks so much for coming on. So you've had Moonfire actually since 2019. And I imagine then the pandemic has changed the way you look at tech, how you invest, and our use of technology. Are there more opportunities now than before?
Oh, it's been an incredible period. I mean, obviously the pandemic changed everything, right? So today, capital's moving a lot faster. There's lots more opportunities. It sort of moved things forward probably a year, 2 years, maybe 3 years, you know, so everything has gone a lot faster. So just to give you a bit of context, you know, today, you know, we have over $200 billion companies in Europe. The first half of this year, 60 billion was invested into Europe, right? That compares to 40 billion for the whole of last year. Okay. And the whole of last year, we had 50 new unicorns created, and today we have 37 created just in the first half.
But is that because capital's cheap, because of interest rates and people want to invest, or is it because the technology is actually really good coming out of Europe?
So there is a component of like the capital markets, the public markets are recognizing, you know, let's say there's 43 trillion in the US, I don't know, there's some 20 trillion in Europe, recognizing that the future growth is in these private companies. And globally, there's about 3 trillion worth of private companies. And so, yes, they're going after it. But at the same time, too, we're living in a world and an age which we're probably the most innovative we've ever seen. So, you know, what we're building here is across all sectors. It's in finance, it's in healthcare, it's in future of work, it's in gaming, you know, across the whole spectrum.
But does it accelerate the trends that you were seeing, or does it change them?
It is accelerating things. So what we're seeing this continuous change, and we are going to have moments, I think, where things are going to retract, and maybe components of tech are going to, you know, change, given the sort of interest rate environment, inflations, and so on, that can affect some of these tech companies. But the overall sectoral trend is going to be still continue, and we're going to see a transformation of what was the old economy into the new economy. And the new economy is transforming again, if you see what I mean, where we're seeing Web 3.0 with the crypto world, which is also changing our whole world.
So what are you looking at? I mean, I love speaking to you because you're in there. You look at some of the companies, you know, some of the gaming companies, some of the crypto companies. Like, what are you looking at the moment that you think is you know, the trend of tomorrow?
Yeah, so there's quite a few. So essentially, what we aim to focus on is looking at ways in terms of us creating more access and generating more efficiency as well, but also better quality of products. So those are our three things, what we call the sort of golden triangle.
And that's across sectors.
Across sectors. So there's 4 sectors that we really find fascinating today. One is the future of work. You know, there's a lot going on there. E-health is also extremely interesting. And then also in the world of gaming and leisure and so on. And then, you know, the final area is financial services, where we see that there's a lot going on there. And they're each one of them is being disrupted by numerous trends. You know, and crypto comes into both finance and gaming more, whereas like future of work is really interesting because the workplace has changed dramatically, and this pandemic has been really unique. HR used to be a function where people looked at your wages and you know the number of holidays you have. Now it's moved to sort of, how do we handle people? How do we handle talent? Because the war on talent is becoming so important, and people are recognizing that people are their most important asset. And so that whole area has just expanded dramatically. And with the pandemic, it's not necessarily about your office anymore. It's about how you're providing these services across your whole organization. So you're not defined by a singular place.
But so, Matthias, this would be what, a company, for example, like an outsourced HR company?
Yeah,
that would be a people's person?
So there's all kinds of, so we have some, you know, one of the interesting companies that we invested in is Oliva, which is helping people with mental health in the office. Or so what it's happening is allowing you to have, at the right moment, the right clinician at the right time, right? So you're matching them up, and so you're utilizing the software to make this more efficient and seamless. And at the same time, too, we're looking at other software where, for example, we're allowing it sort of plug and play in terms of the managing and onboarding of people, and where we're integrating with lots of different other services. And so this is a company called Humans, growing at light speed. You know, we're really impressed with what they're doing with customers. You know, this is a startup with customers in the U.S., in Asia, and in Europe. You know,
but just talk to me about gaming, because I mean, it's something that we cover, but I'm not 100% familiar. I'm not a gamer.
Yeah.
But it feels like this is the you know, the next frontier, and I don't know whether there's also parallel with Squid Games, or whether there's something, you know, that kind of content creation that you could also then monetize in gaming that we should be looking at.
Oh yeah, totally. I mean, it's really exciting. So gaming, you know, is really what is going to become the major media form. You know, how we're thinking about media is going to be all about gaming and essentially moving us towards what we call the metaverse, where we're actually spending more time in the digital world than in the physical world. And what's interesting with gaming is the essence of most games is some sort of economy. If you play a game, there's always some coins flipping around, and then you add crypto into that, you're actually putting in 2 different interesting forces in terms of allowing you to play a game, buy things, and then play another game at another area and bring those things with you. So it's building your identity, and particularly with NFTs and things like that, those are like real valuable things that there's actually a small portion of them. There's not like endless supply of it. And so, you know, people who want to identify themselves with a certain, you know, in the past with a watch or a brand name, you're doing the same thing online.
Okay, fabulous. Matthias, we'll have to get you back on to talk a lot more about crypto and NFTs. Matthias Lungman, Chief Executive and Founder of Moonfire Ventures, joining us this morning. Now, coming up, JP Morgan gives a big boost to software. What could be a watershed moment in the life after LIBOR? So we look at banking next. This is Bloomberg.
think at the low point of the Greek economic debacle? What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms, and I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
The August jobs report packed a big downside punch.
That is a really, really dismal number.
Will September bring enough good news for the Fed to start a taper?
If progress continues broadly as expected, a moderation in the pace of asset purchases may soon be warranted.
Will unemployment keep going down? And what's happening with wage inflation?
It might be a little bit more sticky than maybe Jerome Powell and some of the Fed members think.
Tune in for the September jobs report, Friday on Bloomberg Television and Radio.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I'm not surprised to see this most recent retreat and correction that we've been going through.
Certainly China has already gone through a bit of a correction.
Their plan is to be a superpower, and they're moving consistently in that direction. So we do think it's investable.
Diversification is key in an environment like this.
Being at least somewhat better diversified geographically.
You have to pivot, you have to change, you have to be agile.
Active management, I think, is going to be more important in the next decade in the past.
We've seen a dramatic growth in allocations to privates.
Anybody who's on the sidelines underallocated to alts pre-pandemic and saw the performance. With this reopening, we're just seeing a real resurgence in demand.
It has never been more punitive to hold cash.
If the inflation piece falls over, the whole thing falls over.
The problem is stagflation. That's the real risk.
There's no answers to it yet, but we should expect to see continued volatility.
Well, some top investors are speaking to us on day 2 of the Bloomberg Invest Global Conference, pointing to the importance of diversification amid inflation risks and volatility. Now, this week, we have had what it seemed a watershed moment in the attempt to ditch LIBOR. JP Morgan, with its seal of approval, gives a big boost to the dollar heir, SOFR. Bloomberg's FX and rates editor, Will Shaw, joins us now. So, Will, good morning. Why is JP Morgan's seal of approval so important?
Good morning, Fran. So the backdrop to this is that banks have only got 3 months until all the loans that they issue have to be pegged to a LIBOR replacement. Now, there'd been very little progress in the loan market, and as far as we're aware, none in the $1.2 trillion leveraged loan market. Now, that regulators will be pleased to see has changed. We've seen a loan which is now being marketed by JP Morgan. It's worth $600 million, though the people responsible for the LIBOR transition will be hoping that this is enough to finally get everything moving.
So will JP Morgan's involvement actually break the logjam?
So obviously, like JP Morgan is a huge global bank. Other lenders have now effectively got a role model. They can see that, yes, this can be done. Any technical obstacles can be overcome. The LSTA, which is an industry body group, is talking about this as a tip of the iceberg moment. What I would say, though, is aside from JP Morgan, there's no indication that this year-end deadline is going to get pushed back. So banks were going to have to get on with this anyway.
Well, the FCA has been given a lifeline to British and Japanese banks. What have they announced?
So there was concern amongst banks in London and Tokyo that they had these piles of contracts that could never realistically move away from LIBOR at the end of this year. That was causing worries that there'd be a cliff edge scenario, potential upheaval in the financial markets. Now, the FCA has provided like a critical pressure valve for that, or it's suggested that it's thinking about doing it at least. So it's floated the idea of asking LIBOR's administrator to keep publishing an artificial LIBOR number right through next year. So that's being expanded to quite a large group of products that will provide a lot of help for the market.
Well, how will this benefit the market?
So the worry was that nobody knew, once LIBOR came to an end, what benchmark these contracts would be using. And the fear was that that would trigger these time-consuming and expensive legal rows amongst companies about which benchmark to deploy. That, it looks like, has been avoided. PwC are talking about this as something that will be a huge relief to market participants everywhere.
All right, well, thank you so much. Of course, our Will Shaw there with the very latest on the life after LIBOR. Now, the Bloomberg Short-Term Bank Yield Index, BSBY, an alternative SOFR for dollar LIBOR, adjusted disclaimers also administered by a subsidiary of Bloomberg LP, the parent company of Bloomberg News. A couple of things we want to alert you about. First of all, in the markets, UN's World Food Price Index climbing to a highest in a decade. And then we, of course, look at everything that's been going on in the markets. We're having a good and robust conversation with Matthias Lungman of Moonfire, talking about some of the technology stocks that we're looking at. Overall, stocks rising. U.S. equity futures also rising, bolstered by progress on the debt ceiling impasse in Washington, also ahead of a key jobs report. Now, European equities rebounding, as we heard from the European Central Bank, also saying to be studying a new bond buying program to prevent market turmoil when emergency purchases get phased out. A couple of other things I'm watching, helping sentiment, Russia's offer to ease Europe's energy crunch, the U.S. President Joe Biden's plans to meet virtually with his Chinese counterpart as well. Now, markets, of course, buffeted in the past couple of months by worries about the energy crisis, worries about elevated inflation, reduced stimulus, and slower growth. Concern over U.S. political bickering seems to be easing, and Friday's payroll reports expected to shed light on the trajectory of the Federal Reserve's bond purchases. Bloomberg Surveillance Early Edition continues in the next hour. Danny Berger joins me here from London. Katie Lyons will be in New York. This is Bloomberg.
As Magnus TV in Facebook, since I'm streaming Axie Infinity. Axie Infinity is an NFT game where you can earn tokens, and then that tokens can be converted into pesos. I'm playing almost 4 to 5 hours a day. I'm earning, I can say it's really a lot of money. It can help to sustain my family needs and also to sustain my own business that I'm starting. worried about it because some people who join this Axie Infinity thinking that this is an easy money game, they can earn a lot on this game can sustain their life, and I think that is not the point, or that is not really the game. We are trying now to build a community where other players or my scholars can join this esport, playing Axie Infinity for now, even 5 years, I think.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Watch Bloomberg Surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You look
drop
great.
the bow tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has to go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We should get rid of the debt ceiling. We don't need to have this kind of brinkmanship every couple of years.
We're making good progress. We're not there yet, but I hope we can come to an agreement.
If we don't, we're going to be defaulting on a debt that would lead to self-inflicted wounds that risk the market tanking.
This is Bloomberg Surveillance, early edition, with Francine Lacqua, Matt Miller, and Keely Lines.
It's 10 a.m. here in London, 11 a.m. in Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, October 7th. Our top stories today. Back from the brink, the Senate's close to a deal on the debt limit that would allow the U.S. to avert a default, at least for a couple of months. A major miss for Evergrande. Creditors have yet to be paid for a dollar bond they say is guaranteed by the struggling Chinese property giant. And Russia to the rescue, while Moscow offers to ease Europe's natural gas crisis. The deal has a few strings attached, though. Well, good morning, everyone. I'm Francine Lacqua with Danny Berger in London, Keely Lines in New York, Matt Miller off this week. Kelly, if you look at the markets today, they're feeling pretty comfortable because of U.S. politics. We could have a resolution for a couple of months, and then the U.S. energy crisis may also be abating.
Yeah, it's definitely a risk-on field today, Francine. You saw that in the Asian session. Actually, the MSCI Asia Pacific Index rose for the first day in 5 sessions. Really, if you look at global macro movers, or the GMM function on the Bloomberg terminal, you see green all across the screen, including for the major equity benchmarks, which were really higher across the board. The Philippines were one exception, but stocks up in Japan, South Korea, and Taiwan. And the big outperformance came from Hong Kong, with the Hang Seng up about 3 percentage points. And that was really led by technology, a big rebound taking place for the Hang Seng Tech Index, which hit a record low yesterday. Today, though, jumping off of that all-time low, up more than 5% in the overnight session. One individual stock to pay attention to is China Estate Holdings. It has been a backer of China Evergrande, and the billionaire Lau family that owns it, majority of it, offered to take the rest of the company private at 4 Hong Kong dollars per share this morning, up 32% in the overnight session in Asia, trading at 382. And I would just note as well, in foreign exchange, pretty much all Asian currencies are stronger against the dollar today, but it is being led by the likes of the Philippine peso and the Thai baht, which really underscores the risk on tone. Right now, the Philippine peso stronger against the dollar by 0.6%. Now, here in the U.S., we kind of saw the rebound of all rebounds yesterday. At one point in the session, the S&P 500 was down 1.3%, but after we got that news on a debt ceiling compromise, it actually ended the day higher by 0.4%. That is the first time we have seen a full recovery from losses of that magnitude going all the way back to February. And it does look like the gains will continue this morning. S&P 500 futures up about 0.6%. Now, we saw a round trip in the bond market as well. Yesterday, yields as high as 1.57%. They closed at 152, and that's basically where we trade this morning on the 10-year Treasury. The dollar is giving back some of its strength over the last 2 days. And oil, I would point out, down 2% again today. It is heading for its worst 2 days since all the way back in August, Danny. WTI right now trading at $75.84 a barrel.
That
energy story, some of the easing of those prices certainly giving us a lift higher in these European markets where the ping pong continues. Yesterday it was lower by more than 1%. Today it's higher by more than 1%. But it really is those kinds of companies that benefit from easier energy prices that are outperforming us today. So think about utilities, construction, autos. That stands to reason that we have the DAX up more than 1%, Spain, the IBEX up more than 1.5%. We're also looking at the Cacarone up more than 1% as well. So some of those large companies where we had been worried about the energy story really allowing us to thrust higher from here. Now, if we flip up the boards and look at specifically the price of energy in Europe, that has cratered as well, down 8% for one of the biggest declines on record. We're looking at natural gas below 100 euros per megawatt hour. Again, this is roughly the amount it requires to power a house for 1.2 months. So that's trading at 98 euros, allowing the stock market to go higher from here. Really stepping in, aiding markets is Russia offering to help ease some of the crisis. That happened late yesterday. So it's today that we're seeing the benefit of it. That also means yields can ease off somewhat. We're looking at basically a flat UK 10-year yield. But really where we're seeing a lot of the buying is in Italy. Look at BTP yields here. They are lower by 2 basis points. People happy to jump into more risky Italian debt after a Bloomberg scoop last night that the ECB is looking at a new bond buying program after the emergency runs out. That means investors, Francine, are happy to rush in and buy the sovereign debt that frequently is seen as more risky.
Yeah, there you go, and Draghi to the rescue. A lot going on in the markets today, that in between also U.S. gas and power prices, as Dan was just saying, stabilizing. Now, this is what else we have today. We'll get U.S. initial jobless claims at 8:30 a.m. New York time. Then Cleveland Fed President Loretta Mester takes part in a virtual panel discussion on inflation dynamics with ECB Executive Board member Philip Lane. That's at 11:45 a.m. New York time. 5:30 p.m. New York time. Tesla's annual shareholder meeting will also be held from the company's under construction factory near Austin, Texas. And then the EU Sustainable Investment Summit 2021 takes place. It's the first annual event of the European Commission on Sustainable Investment following the launch of the European Green Deal. Now, we start in Washington. Democrats signaling they'll accept Senate Republican leader Mitch McConnell's offer to raise the debt ceiling into December. Now, that averts the immediate risk of a default, but raises the risk of another political fight near the end of the year. Let's get straight to Jack Fitzpatrick, Bloomberg government reporter, who joins us from Washington. Jack, first of all, do the Democrats actually have this as a win, and could the vote be today?
They don't have a handshake deal yet on exactly how this is going to work out. It's very good news for the markets and for both parties that there is this Republican offer to bump things back by 2 months. But first, we have to see them work out the details of how it's going to work and then get to a vote. A vote today is possible. It could potentially get bumped to Friday, so we're still waiting on the exact timing of that. But really keep in mind, this keeps everything essentially the same in terms of the stalemate that the two parties had come to, and just punts it until December. We heard positive feedback from Senate Democrats that were happy that Mitch McConnell offered to raise it a few $100 billion to get them to December, but still Democrats are saying they aren't going to follow his demands and eventually significantly raise it through the reconciliation process, which would allow them to do it alone without Republican votes. So the underlying issue is absolutely still there and is a bit dangerous for December, but at least there's not the time crunch that they faced as of yesterday morning.
Yeah, at least in theory, the Treasury can pay its bills at least through December 3rd. And speaking of the Treasury Department, Jack, we also got news overnight that officials there are trying to decide whether the U.S. should push IMF Managing Director Kristalina Georgieva to resign amid an ethics scandal. Can you walk us through the administration's thinking?
I'll be honest, we don't have that many details on exactly what the administration's approach is there. Yesterday was a little bit of a wild day on Capitol Hill, so I'm going to be a bit short on details on exactly the administration stance on the IMF chief, but we'll follow up on that one.
Okay, Jack, thank you very much. We'll have to get you back to cover that for us. Of course, debating now the Biden team of the IMF chief's fate. That's our Jack Fitzpatrick of Bloomberg Government. Now, turning to China, where creditors have yet to receive repayment of a dollar bond they say is guaranteed by Evergrande and one of its units. Let's get more on this with Bloomberg's Tom McKenzie. So, Tom, this one, its effective due date was essentially Monday. What are the consequences of non-payment on this specific bond?
Well, this bond is linked to a company which is part of a JV, which is owned by Evergrande. The murkiness, again, pointing to investor concerns about the lack of transparency in terms of how the property sector and Evergrande and others have been borrowing. This is Jumbo Fortune Enterprises. Don't get distracted by the ridiculous name and the irony there, but this is a company that lent essentially $206 million. This is the bond, this is the principal, and as you say, it wasn't paid back. So at least that's what we're hearing from the owners of this bond. It follows, of course, on from the fact that we know that other bondholders, dollar bondholders, have not been paid the principal in the last few weeks. They have a grace period. This one does not. So the importance and the significance of this is that this could be the first major default. We're still finding and waiting to get the details on that. The others had this window grace period. This one doesn't. We'll wait a few days because there's 5 days where they can work through some technicalities. This could be the first major default then for a business linked to and owned by Evergrande.
Tom, we also found out through sources that President Joe Biden plans to meet virtually with the Chinese President Xi before the end of the year. The U.S. Secretary of State, Anthony Blinken, told us in an interview yesterday that the U.S. wants China to act responsibly.
What China does economically is going to have profound ramifications, profound effects on literally the entire world because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
I mean, there seems to be a belief in the market today that actually things are stabilizing the two, superpowers.
Certainly. I mean, investors and the markets, whenever they see that there is communication between the two sides and at the most senior level, that is seen as a positive. We know that they spent 6 hours, Yang Jiechi, the Chinese side, a key advisor on foreign policy, and Jake Sullivan from the national security team talking in the last few days. This seems to have led up to this meeting that's going to happen by the end of the year. That is the plan between the two presidents. But the issues and the tensions, of course, remain across a whole number of issues. Taiwan, and you talked to the Secretary of State about this, and the fact that China's been sending dozens of planes into Taiwanese airspace, and trade as well. We know that Catherine Tai is going to be talking to Vice Premier Liu He, who leads the trade negotiations on the Chinese side, possibly as early as this week. She wants to ensure that China is going to meet these commitments around the Phase 1 deal.
Tom, thank you so much. Our Tom McKenzie there with the very latest on China, Evergrande, and of course, foreign policy. Now, Russian President Vladimir Putin has offered to ease Europe's gas crisis on a day that saw gas prices jump 40%. Russia could potentially export record volumes of the vital fuel to the continent this year. Well, again, the U.S. Secretary of State spoke to us about high energy prices yesterday.
I think the high energy prices we're seeing now reinforce a few things. They reinforce the need for a transition to new forms of energy, particularly sustainable energy, and at the same time, they reinforce the need for energy diversification.
So let's get more on this with Bloomberg's Ritika Gupta. I mean, Ritika, the market remains volatile, and it's unclear whether President Putin is happy to help with supplies at what cost. Is it all about Nord Stream 2?
Yeah, Francine, it has certainly been a volatile couple of days here for that gas market. And we saw going into yesterday, we saw those Dutch front-end futures surging some 60%, only to drop in the double digits after those comments from President Putin that Russia would step in and stabilize the market by supplying record supplies there of record volumes to Europe. And this morning, we see that slump continue here in the UK, over in Europe, and also those US gas futures as well. But of course, there are strings attached, as you mentioned. Russia seeking that regulatory approval for Nord Stream 2. That is its latest gas export project. It gets about 23% of its exports from Western Europe. So that is its top market here, Francine. But of course, Germany has until January to make that decision. But the situation over here in Europe is dire. Inventories in Europe are sitting low, and Russia, there's also the question of whether Russia can actually fulfill on these promises, because it also has its own domestic market and has to meet the demand there, which has been steadily increasing as well. So the main message really here from President Putin that if Europe helps Russia, then Russia is prepared to help Europe.
There's always a catch. Thank you so much to Bloomberg's Ritika Gupta. And let's get back to the U.S. markets now and take a look at some stocks moving in pre-market trading. One of your big outperformers to the upside is Rocket Lab, of course, the space systems company. It is rocketing higher, one might say, up 8.5% in pre-market trading after the company said it won a contract with NASA for a technology launch later on next year. Another stock moving to the upside is Levi Strauss. It reported after the bell. Revenue topped expectations. It raised its full-year profit outlook. Apparently, a lot of people are out there buying denim, and that is actually enabling the company to pass on higher input costs and increased prices for consumers, so it's not feeling a whole lot of hurt from supply chain issues. It's up 4% in pre-market trading. One mover to the downside, though, is Moderna, of course, the COVID-19 vaccine maker. You have a number of countries now halting shots in younger people. Sweden halting yesterday for those under 30, Denmark for those under 18, and then this morning, Finland saying they're not giving shots to any men under the age of 30. So the stock fell 9% yesterday, and it's lower by another 1.8% or so this morning, Francine.
Kaylee, a lot going on, of course, with some of these vaccine producers. Now, coming up, Lori Heinel, State Street Global Advisors Global Chief Investment Officer. She'll have a thing or two to say about inflation and market movements. This is Bloomberg.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet
We might be.
that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
All these attempts to revise frameworks for monetary policy, average inflation targeting, just out of the window, basically, because the idea that you can gradually control inflation to let it go above target a little bit for a short period and then bring it back doesn't square with what happens in the real world. So I think being alert to the data, some of the upward pressures will be transitory, but the real risk is that it gets embedded into upward pressure on wages. That's going to be the thing that central banks will focus on.
Well, the former Bank of England Governor Mervyn King is speaking to me a little bit earlier. Now let's get the lowdown on the markets with Eddie van der Veld, our Bloomberg MLive strategist. Eddie, I have to say, Lord King was actually very punchy. He says, look, we're getting inflation completely wrong. It's sticky and we're reading it wrong because of the data available at the moment. Right. So ditch the forecasts.
Yeah, and I think he's nailing all of the right points. I mean, nobody is surprised by that because he's extremely experienced and knows the market very well. But I think this is the risk, right, that we are seeing these pressures feeding through into wages, and we are already seeing some of that. Now, tomorrow when we get the non-farm payrolls from the US, we will learn a little bit more about whether that is continuing again this month. But it does feel like we're getting to that point where inflation is crossing the bridge from transitory to persistent.
And that raises the question of Fed action, Eddie. I'm glad you brought up non-farm payrolls. Will the jobs report tomorrow change anything about the equation for the Fed?
You know, the non-farm payrolls number is always one of the most watched numbers in markets. But this one in particular, I wonder, because it would have to be an absolute shocker for the Fed to say, listen, we're gonna ditch our plans and we're not gonna do anything. I think almost more important is the CPI reading that we're getting next week. So I think, you know, and really we have seen, we looked at this on Markets Live, volatility has been greater during US CPI readings than they have been during non-farm payrolls readings.
Well, at least one source of relief before we get jobs numbers that might be that has been lowering energy prices, just that speculation because Russia stepping in, saying that they're willing to help. But is that overdone? Is the crisis over?
I was surprised by the size of the reaction because Putin's promises came with a lot of strings attached, right? He would like to see Nord Stream 2 approved and he'd like to see it soon. And what he said was, I've already sent you loads of gas this year. We're on track for a record. So it's kind of like me telling my kids, listen, you've had loads of ice cream. Why should you have any more? I was a little bit surprised.
I say that all the time.
Right, exactly. and then their takeaway is like, we're going to have more ice cream. But listen, I think that the natural gas markets have been extremely overcooked. I think there has been some macro tourists that are coming in, and perhaps that was just an excuse for the market to come off a little bit.
Yeah, I have to say I had quite a lot of trolls actually yesterday because apparently I asked the Secretary of State a loaded question by saying, you know, whether there was whether what Putin was saying was politically motivated.
Right.
What does it mean for prices going forward?
For natural gas prices, I think natural gas prices are probably going to remain elevated even if we see a substantial pullback here, and that will of course feed through into into inflation in the UK, into inflation other places, and we might even see companies. We've already seen companies scale back production, and that weighs on GDP, right? Which means that the central bankers don't necessarily want to cut rates because growth isn't as fast as they'd like it to be. So it's a really sticky conundrum for them.
Eddie, thank you so much. Eddie van der Velde there from our Markets Live team. And just a reminder, we have a great blog going that, of course, Eddie and his team are manning MLIV Go on the Bloomberg terminal. We also have some breaking news in banks. BNP Paribas now weighing plans to boost payouts to 60% of profit. Now, that is quite significant. It's only a couple of weeks ago that the ECB actually gave European banks the green light to resume payouts and dividends. So we'll have to see whether other banks follow suit. For the moment, BNP Paribas gaining a touch, 1.4%. A full roundup of the banking sector in Europe shortly. This is Bloomberg.
dealing with that blackout risk, those energy prices spiking?
Well, in the first instance, we will manage it over the next while. I think the key agenda item for Ireland on the energy front is wind, and we've been great developers of onshore wind. The next decade in Ireland will be offshore wind, and we have streamlined our planning application framework for investors so they have certainty in terms of applying to invest in terms of offshore wind infrastructure in Ireland. So that will be a key agenda item of ours, and renewables. We have a very strong climate component in our government and in our government programme, And that, of course, is not disconnected from the energy agenda. And there will be challenges of that, there is no doubt, but we are making considerable progress.
Are you worried about the here and now? Are you worried about blackout risks? Are you worried about the amount of consumption data?
Data is taking up considerable demand in energy terms, but we have been robust in terms of meeting that to date.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kayleigh Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Kayleigh Lyons in New York. Now let's get straight to the Bloomberg. First word news, and a federal judge has temporarily blocked Texas' new ban on most abortions. Well, he said the law outsourcing enforcement to bounty hunting members of the public was contrived to get around a constitutional right. It's a major win for the Biden administration, which has sued to overturn the ban. There's a booming market for finance jobs in London now that the UK lockdown has been eased. Now, there were more than 8,300 new listings for financial services positions between July and September. That's more than twice the number of the third quarter last year. In China, travel during the so-called Golden Week national vacation was down by a third from pre-pandemic levels. Government measures to contain coronavirus outbreaks prompted vacationers to spend time closer to home. Well, that may be why Chinese movie theaters saw an increase in business. And South Korea has long been known for its manufacturing. Now, the Netflix hit Squid Games is taking the country's cultural clout to another level. Now, the show is about indebted people fighting in a deadly game for survival. It could help South Korea's cultural exports become much bigger contributors to the economy. And it's absolutely incredible, actually, how Squid Game is lifting soft power and is lifting the economy as a whole. So off air, Kayleigh and Danny and I talk about it. Danny, I think, is the only one who's seen the first episode, and it's pretty gory.
Yeah, it is a little bit gory, but it is really, really good. I like it a lot, but I love how it's this big cultural phenomenon, and all of us are too concentrated on markets. I'm the only one who's seen anything in only the first episode, Kayleigh. I think we need to get our binging standards up a little bit.
I mean, I binge my fair share of Netflix, I have to say. I just don't particularly like gore, so I'm not sure if this show is for me, but it is interesting when we're talking about South Korean cultural phenomena. It's not just Squid Game, but there's also K-pop. And I haven't watched Squid Game, but I have heard a fair amount of K-pop, Francine, and that in particular is, I think, a phenomenon that has taken the entire world by storm, and that is definitely not gory.
Yeah, it's not gory. I feel like it was very 2019 K-pop. Netflix now saying that business last year added some $2 billion to Korea's economy. And so this could also be a huge, huge market implication for Netflix and actually the kind of content that will be created going forward.
No, it's actually
definitely.
really
I just want to remind I also just want to remind Baby Shark also came out of South Korea, another very important cultural touchstone for us as well.
Do not get that stuck in our head.
All right, too late. Coming up next, Lori Heinel, State Street Global Advisors Global Chief Investment Officer. This is Bloomberg.
Okay, traders, we need to cancel order to sell short Bitcoin because it, as you can see, we didn't have chance to purchase and it moved far away from our entry point where we wanted to sell short. Okay, so please cancel your order. Stay with me and I'll let you know when I will decide to trade Bitcoin. Okay, stay safe, guys. Speak to you later.
What we have built through this process is essentially a mechanism for getting oppressed women and girls out of Afghanistan. So we're actually going to circle up and see what resources we have left, to see what options we have left, what mechanisms we have left, and actually look at potentially trying to get more women and girls out of the country as well.
We've been through a lot, us, as a team. I know sleepless nights, but you know what? There's nothing more satisfying than knowing that you've saved many lives, and will continue to support these girls on their mission.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London, Katie Lyons in New York, Matt Miller off this week. If you look at the markets, Danny, finally a little bit of uplift because the political worries in the U.S. may be pushed to one side, or at least pushed by a couple of months, and then energy prices stabilizing.
I think the political picture is so fascinating because all of us have talked to people who have said the markets, they're not pricing in any risk from a default. They don't care about it. But looking at what they're doing today, and indeed yesterday, right when we got that news, I mean, Fran, it seems like they were pricing it in. At least it added to the more positive mood music that we had at the end of the day yesterday.
100%, which is why, Kaylee, we're seeing this risk-on mood.
Yeah, I mean, we saw a big reversal intraday in yesterday's session here in the U.S. The S&P 500 going from a 1.3% loss at one point to actually end the day 0.4% higher on news of that debt ceiling compromise potential. And once again, you are seeing green on the screen when it comes to European and U.S. Markets, at least U.S. futures. Right now, the Stoxx 600 in Europe is up the better part of 1%, led by autos and parts. Pretty much every sector is in the green. The one exception is energy, which goes to the stabilization in energy prices you both were just speaking about. And when it comes to S&P 500 futures, we're up about 0.6%. In the bond market, very steady. We go basically nowhere, up less than a basis point on the U.S. 10-year yield. We're just north of 152. And then I would point to natural gas futures as well. Talk about a turnaround, down about 9% in yesterday's session, 10% even for U.S. natural gas futures. And once again, we're down 4% in today's session. You're also seeing declines for oil, actually the worst two-day losing streak for oil going back to August. And as a result, energy-related equities are some of your big laggards in pre-market trading. Occidental Petroleum, Devon Energy, Diamondback, and Terra Resources all down in the ballpark of 2 to 3%, Danny.
Kaylee, I want to talk about a topic that I feel a lot of companies are saying in their earnings, and you have certainly asked a lot of guests about, and that is margin pressure. How you want to be pricing companies that have this as inflation rises. I want to welcome our radio listeners as well. I have a chart in front of me, which I will explain to you. It is a lovely histogram, and it shows monthly percentage changes, specifically a spread between stocks that have the most pricing power in the U.S. and those that have the least pricing power in the U.S. This is a basket from Goldman Sachs, and it measures this by stability of margin. So again, for our radio listening audience, when this is moving higher, it means that companies with high stable gross margins, aka better pricing power, are outperforming. But over the past month in September, it was actually companies that have lower pricing power that have outperformed. So this is a drop of more than 5%. So in other words, those companies outperformed by 5 percentage points for companies that have good pricing power. Again, this is something we talk about all the time, but it seems the market is not taking these margins into account. Indeed, that trend has continued so far this month, Francine.
Daniel, a lot going on, of course, in these markets. Great chart in terms of pricing power. Let's get straight to Lori Heinel, State Street Global Advisors Global Chief Investment Officer, who joins us today. Lori, always great to speak to you, especially on a day where we've had a lot of market movements, to put it diplomatically, over the last 5 sessions. The market is worried about inflation. The market is worried that actually central banks are just not acting quickly enough. Is there a danger of a correction?
Well, we've been waiting for a bit of a pullback for a while now. Certainly, markets have rallied quite strongly off the bottom. We've seen improving economic backdrop, but of course, there are plenty of things to be concerned about, not least of which is inflation. So to see the markets get a little bit more spooked by that prospect is not surprising. We would see this as actually being a good pause that refreshes, though, because it does set us up, we think, for 2022 to be a pretty good year as we continue to see this recovery elongate.
Lori, you're broadly overweight equities. Are there any sectors where you actually recommend that investors pull back on?
So we actually did trim our positions pretty much across the board last month. And part of that was that we felt that the markets had gotten a little bit ahead of themselves. But we do still remain pretty high conviction on U.S. large cap. We think that that's still a place that does, on a relative basis, pretty well into the balance of the year. But if you look at places like emerging markets, if you look at places like APAC more broadly, that's been an area where we've been a lot more cautious, in part because of China.
Yeah, how great do you think the China risk is, and is it priced in by the market at this point?
Look, there's a lot to be concerned about in China right now, and certainly from the standpoint of some of the headline risks related to real estate, and we've seen some more additional pressures there just this week. That's a place that we're being quite cautious in. We do think, though, that the pullback has made it much more attractive to be in China for long-term investors. We do think, though, in the short term, there's likely to be a lot more volatility, and so we're being a bit more measured in China right at this moment in time. In fact, a lot of what we're talking to clients about is should they actually think about China as a separate allocation versus having it be embedded in their emerging positions.
And obviously, China is where a lot of supply chain issues emanate from, given closures of ports, of factories that we've seen over the course of the pandemic. When you think about those supply chain issues and the higher input costs that result, do you worry about a major headwind to earnings as we head into the tail end of this year?
Well, just as you were talking about a little bit ago, it's easy to get sort of stuck in a few elements, but keep in mind that there are lots of things that are going to drive earnings into the future. Certainly one of those is going to be pricing power, and you had a chart earlier that demonstrated some of that. One of those is going to be the supply chain, but it's also going to be labor costs. And then finally, what do companies invest in? So we think that one of the things that's underappreciated is that business investment has been relatively weak over the last decade, really. And so those companies that find opportunities here to invest might actually be positioned pretty well.
But could that investment take a while longer to come online, Lori, just because of the high energy prices and, again, just general inflation and supply chain issues we've seen?
Yeah, well, it depends. Certainly, if there are large capital goods projects, semiconductors, things of that nature, then clearly that is a much more elongated investment. But if you think about some of the hospitality businesses and their ability to automate certain kinds of labor functions, I mean, you can't go into a grocery store or a restaurant now without encountering some sort of technology to help boost productivity. So there are things that can be much more creative, much more quickly.
I can't help but think about hospitality and think about value stocks that have gotten beaten up. Lori, are you a buyer of value stocks into year end?
So we've actually been a bit more barbelled. So we have liked value because it is an area where the valuations are relatively attractive. And if we do have a much more persistent and sustainable recovery, those stocks should do better. But you can't ignore some of the momentum-driven growth stocks. So we've been a bit playing both ends of the spectrum there.
Lori, when you look at some of the things that actually remain the most attractive, is there something unusual that you'd be buying in these unusual markets?
Well, there's no free lunch right now. I think that in the bond markets, we've been trying to play the belly of the curve, so more of the 5-year area where we're slightly long duration there. We've looked selectively at credit, again, focused a little bit more on the upper echelons of credit. And then, as I said, in equities, trying to be a bit more diversified. I'd say our positions across the board are more diversified, just given that it's difficult to determine exactly where the next move might come from.
Do you think we have seen the peak in commodity prices for now, and how does that translate to an equity allocation?
Yeah, well, it's a little bit difficult to tell. I mean, certainly things like oil are very idiosyncratic from a supply chain standpoint. We've seen some of the moves in that market just recently. So, and oil prices do drive a lot of what happens in commodities. So I think we've been playing this theme that it's sort of peak everything in terms of peak earnings, perhaps peak pricing, maybe even peak inflation. But a lot of those things still remain to be seen. But I would agree with the idea that we may have seen a peak in some of these cycles.
At the same time, Lori, over at JP Morgan, Marko Kolanovic has said that oil could get up to $130 a barrel, and that wouldn't spook markets. I mean, that would be a very steep price. Is there a limit, you think, to the price of oil that could in itself cause a deeper sell-off in these equity markets?
Well, it kind of links back to what we were talking about earlier in terms of where's the market leadership going to come from. I mean, certainly there are certain sectors of the market that are less vulnerable, right? Again, U.S. large cap growth stocks tend to not be as geared to oil prices, but certainly the value trade can be geared to oil prices. And when you look at other regions around the world, again, in emerging markets, there are winners and losers as it relates to oil. So I don't think it's fair to just cast a broad brush. You have to look under the surface and see who's being impacted by that pricing and who's not.
Lori, were the markets actually worried about the debt ceiling? A lot of people thought they weren't, but if you look at the lift today, because this will be postponed by a couple of months, it suggests that it is.
Well, it's hard to disentangle what specific factor the market's responding to in a particular day. I mean, certainly the debt ceiling is always a bit of a risk, and we've even heard the Fed express caution around their own timing, in part because of the debt ceiling, and now question mark about whether that will put in jeopardy some of their intentions for the end of the year. But we think that there are other much more sort of structural problems beyond the debt ceiling. Certainly the nature of the recovery, continued concerns about inflation, and then some of the supply chain disruptions that we talked about earlier.
Lori, thank you so much for joining us today. Lori Heinl there of State Street. Now, coming up, tensions over Taiwan. The U.S. Secretary of State, Antony Blinken, is urging China to change its behavior. More from our interview shortly. This is Bloomberg.
Essa população é uma população importante, é uma população que frequenta a escola também, né? Então é importante que eles também estejam protegidos para o coronavírus, evitando assim a transmissão.
Eu estava esperando muito por essa vacina. Desde o ano passado eu estava torcendo logo para poder minha vida logo voltar ao normal, que eu quero logo voltar para a escola, eu quero voltar a sair com meus amigos, eu quero sair, eu quero voltar à minha vida normal. Foi toda administrada.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua with Danny Berger in London. Kaylee Lyons in New York. Now, President Biden planning to hold a virtual meeting with China's Xi Jinping before the end of the year. Among the possible items on the agenda, trade and rising tensions over Taiwan. Well, we sat down with the Secretary of State, Antony Blinken, in Paris, and he discussed a recent phone call between Biden and Xi.
They spoke on the phone just a few weeks ago and had a productive conversation covering a lot of issues. And they, whether they'll have occasion to get together in the weeks or months ahead, we'll see. They're likely to both participate in some fashion in the G20 meeting, for example. But they had a good, productive conversation, and will continue the work that they set out.
We've seen incursions of Chinese plane in Taiwan. Is there a red line that you think President Xi will not cross? Does he understand a red line, or are tensions high?
Look, the actions we've seen by China are provocative and potentially destabilizing. So what I hope is that these actions will cease because there is always the possibility of miscalculation, of miscommunication, and that's dangerous. So in the past, we've managed to handle the issues surrounding Taiwan in a way that's actually sustained stability. Provocative actions go in exactly the wrong direction, and it's very important that no one take any unilateral actions that change the status quo by force. And so we really need to see China cease some of the actions that it's taken, because they are potentially a source of instability, not stability.
And so the U.S. needs to take a hard line, but at the same time trying to find a common agreement when it comes to climate change.
Well, there are many issues in the relationship between the United States and China. It is one of the most consequential relationships in the world. It's one of the most complicated relationships in the world, and it has different aspects to it. There is certainly a competitive aspect that we know very well. There are adversarial aspects. There are also cooperative aspects. And we have to be able to deal and engage in every single one of these aspects of the relationship. At the same time, climate happens to be an existential issue that affects everyone on the planet, whether it's the United States, whether it's China, whether it's any other country. And China, like the United States, has great responsibility when it comes to dealing effectively with climate change. We're about 15% of global emissions. China is 37% of global emissions. And so it's important for both of us to step up and meet our responsibilities. And that means having ambitious targets for how we're going to actually curb climate change. It also means making sure that we're contributing to help others deal with resilience, to deal with adaptation. And it means taking important steps like, for example, moving away from coal.
Secretary, there's a lot of focus, of course, on how the Chinese authorities are dealing with Evergrande. What does it tell you about Chinese stewardship?
Well, look, China has to make sovereign economic decisions for itself. But we also know that what China does economically is going to have profound ramifications, profound effects on literally the entire world, because all of our economies are so intertwined. So certainly when it comes to something that could have a major impact on the Chinese economy, we look to China to act responsibly and to deal effectively with any challenges.
Well, that was Secretary of State Antony Blinken speaking with me in Paris. We talked about Taiwan, China. We talked also, of course, about Russia and the subs deal that never happened with France, trying to reassure allies that actually things are getting a lot better. If you look at the read across, of course, from that interview, Danny, a lot of the focus is on energy prices. The Secretary of State very cautious in not blaming Russia, but certainly giving them a stark warning.
Yeah, absolutely. And it's interesting that these comments obviously come at a time where energy prices are sky high, and Europe, to some degree, might need to rely on Russia. So it's a very fine line to walk. If Russia is what's needed to help calm the energy complex, at least in the short term, it also becomes extremely political, Kaylee, and obviously consequential for markets.
Well, we are actually just getting some headlines out of the Kremlin. The spokesman there, Dmitry Peskov, saying that Russia's gas boost to the EU does not depend on Nord Stream 2 approvals. It's, of course, the question of the strings attached. But I also thought, Francine, it was interesting, your conversation with Secretary Blinken there about China and climate, given the power crisis and China telling coal producers, energy producers to secure power at whatever it takes, telling coal producers that they can ignore annual quotas. How does that track with China's efforts towards carbon neutrality by 2060? It's a very fine line to walk.
Right, and a very simple question. If you're fighting with China on technology, if you're fighting with China on Taiwan, and if you're fighting almost on every front, how do you get them to sit down to talk about those climate change talks? Now, coming up, it's the final day of the Bloomberg Invest Global Summit. We'll hear from B Capital Group Vice Chair Sheila Patel and the former U.S. Treasury Secretary Steve Mnuchin. Look for those throughout the day today. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Francine Lack with Danny Berger in London, Katie Lyons in New York. We're also joined by Tom Keene. We're so excited to have Tom Keene, co-anchor of Bloomberg Surveillance, with us. Tom, after markets falling out of bed, it seems like today they take solace in the fact that U.S. politics are stabilizing somewhat, at least for a couple of months.
Well, the gentleman from Moscow and a gentleman from Kentucky come to save the day. Clearly, it's a rescue towards good news, and the tape shows that. This morning, we've got to fold in here, not the market activity we've seen, Francine, but going to jobs day tomorrow. Let's look at the Thursday chart. In America, claims come out weekly. That's high-frequency data, and they'll be out at 8:30 this morning. This is a really odd and important chart. This is claims back a gazillion years, adjusted for population. You got a statistic, but you got to adjust it for the size of America. A sloping down line is a better labor economy, a better 1980s, and then a general trend, and then a fully employed America before the pandemic, we spike up in the agony that we all lived in 17 months ago, and we've really come down remarkably towards, once again, a so-called fully employed America.
Well, Tom, there's mysteries to this labor market as well, because you can still get hundreds of thousands in the print on weekly jobless claims and have 10 million job openings in the U.S.
Well, this is one of the oddities we see. I think Jeffrey Sachs was led on this. Jeff Sachs of Columbia was a decade ahead of everybody else on the bipart of America, John Edwards' two Americas, and there's a part of America that is essentially unemployable within a modern, skilled America, and that's what we talk about. Certainly, that's what they talk about in Washington each and every day.
Tom, do we need to see more from companies in terms of their earnings and what they're saying about the labor market to get a better picture of exactly what's going on?
They're gonna, from what I can tell, Danny, every single company is saying we can't find people. I don't know. I don't know any other instance besides that. There's a desperation here, and of course, the truly generational thing here, back at least 15 years, is finally labor has power, and you get an increasing labor share. That's a debate. That's a theory. Maybe it'll happen.
But Tom, we keep on hearing across the world, and especially in the U.S., that people can't find the jobs that they need to employ for. So how do you fix that?
Well, you and I have had these conversations at Davos. You fell off your chair once, asleep over it, where they go, well, we need to educate more for long-term Americans. Okay, that takes only 20 or 30 years. Your good question is, how do we do it in 24 months? And that's a really debated question. I would go to the German model, which I think almost a guild model, Francine, back to the 17th century, 18th century. But maybe the guild model of Germany does a little bit better.
Yeah, here in the UK, it's even more complex because a lot of people can drive, but they cannot find the lorry
Francine,
drivers.
did you see Hermes earnings?
I did not, actually.
I mean, I know you were on top of it. Hermes's sales were up 33% over pre-pandemic.
That's incredible.
That's an incredible
I guess,
statistic.
Yeah, I guess it's pent-up demand, right? So you don't shop for 18 months and then you go in. I think Hermes, like Chanel, also increased prices. I mean, there was a rumor that Chanel increased prices by 30%.
Puts me in my place. I'm going Hermes.
She's flaunting the pronunciation.
Kaylee, I'm going Louis Vuitton and the rest of it. And she's got the fancy French accent.
If you have the fancy French accent, perhaps you get a discount, Tom. I know Tom Keene working on the Rosetta Stone for Italian and French, so I'm looking forward to testing Tom, co-anchor of Bloomberg Surveillance. Of course, he'll be on with full market reaction shortly. Let's take a look at what else we're watching, and Kelly's also looking at U.S. data.
Yeah, I feel like Tom and I are always watching the same thing, because I, too, am watching initial jobless claims. We get the print at 8:30 a.m. Eastern Time, expecting for 348,000. Of course, this is ahead of the jobs report tomorrow. It really is just whether or not it gives us a signal of continued labor market improvement or not, because remember, we're coming up 3 consecutive weeks where jobless claims have risen, but a lot of that was due to California, to effects from Hurricane Ida. So we'll see how the print shakes out today, Danny.
Kaylee, I am looking at Tesla, specifically their annual shareholder meeting later today. It'll be after the bell in the U.S. Now, usually this is just kind of a perfunctory type event. You go through the motions of voting for things, everything passes. But I think it will be fascinating because this time around, it's being hosted from Texas. Now, if anyone has been paying attention to the news from Tesla, they just had a factory being constructed in Austin. This was a Bloomberg scoop. Will they announce it as their new headquarters in this meeting, Francine?
Yeah, that's pretty interesting, especially as we've seen, for example, Kathy Wood move headquarters elsewhere. I'm looking at Russia offering to ease Europe's gas crisis. So we have great reporting from our team in Moscow saying that Vladimir Putin's comments were actually a deliberate attempt now to calm an increasing unstable market. This is according to people with knowledge of the country's energy policy. Now, more Bloomberg Surveillance up ahead. We'll hear from Richard Haas, Council on Foreign Relations President, and of course, we look at energy with Amrita Sen, Energy Aspects Chief Oil Analyst. This is Bloomberg.
China's growth because it is already slowing. Chinese manufacturers are curbing production. This is the latest shock to global supply chains, already delayed by, port delays, chip shortages, saddled with soaring commodity prices as well.
Well, Haslinda, when we've seen a lot of supply chain disruptions at the beginning of this COVID pandemic, and then, supply chains became resilient and it really moved goods around, especially medical goods and supplies. But now, at this part of the pandemic, we are seeing disruptions again, and discontinuities. And that is because of what we spoke about, the demand that is pent up. And of course, if you have factories slowing down and, not being able to produce as much, that is going to impact growth and the recovery.
The August jobs report packed a big downside punch.
That is a really, really dismal number.
Will September bring enough good news for the Fed to start a taper?
If progress continues broadly as expected, a moderation in the pace of asset purchases may soon be warranted.
Will unemployment keep going down? And what's happening with wage inflation?
It might be a little bit more sticky than maybe Jerome Powell and some of the Fed members think.
Tune in for the September jobs report, Friday on Bloomberg Television and Radio.
Isn't inflation too low, the problem is inflation too high.
Yes, inflation is going to become more problematic, but not problematic enough for stocks.
If inflation risks persist, you're going to see room for break-evens to continue to rise from here on.
It's going to be very wobbly because there is elements here that we're dealing with stagflation.
There's also this idea that higher prices ultimately become a solution to higher prices.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Turning yesterday morning upside down from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Following the biggest one-day reversal on the S&P 500 since February, we add some weight to yesterday's rally. Up 28 TK, we advanced 0.6% on the S&P, and we have a deal kind of sorta down in DC lined up.
Yeah, well, I mean, McConnell to the rescue, Putin to the rescue. The news turns, John, you captured the turnaround in European hydrocarbons yesterday. John, it's a melt-up.
I think you nailed it there, Tom. Unintentionally as well. McConnell to the rescue, Putin to the rescue.
Yeah.
How much faith can you have in that lasting?
Well, whatever. You know what? It's a melt-up, John. What I know is when we go to the data check, we are in the midst of a market up. It's a draw up is what we're calling it. It's a new surveillance word. The draw up this morning is Standard & Poor's 500 up 2.some%. NASDAQ 100. What's the opposite of craters?
Up 0.9%.
Moonshots.
Surge.
From a drawdown, Lisa, to a draw up, apparently.
It's a market drop.
All right, well, let's think of what lingo we can come up with next. This, to me, has a question of what has material changed? Does this indicate that we've just been looking for worries to justify trying to lighten up portfolios heading into what should be volatile because valuations are so high? I was struck by the question of, are valuations really still so high given where we are on forward earnings expectations and given how much we've gone down?
Earnings season less than a week away. Some great notes kicking around this morning. Here's one from Kit Jukes. Starting the morning like this, the image of a friendly Russian bear telling us that all's going to be okay, Tom, is a little unnerving. Some people share that view, TK.
Yeah, he made a really good point, and it's a mathy point. He got chastised, he says, outside of the show yesterday because he didn't use a log y-axis on the hydrocarbon surge. And folks, this is wicked inside baseball, but the smart guy from SocGen says he should look at percentage move, not the abrupt move. Farrow, you showed the moonshot yesterday.
That move was
and
unreal.
Hydrocarbons. And the answer is adults go to logs. And when you go to logs, seriously, the drawdown isn't as big as it looks when you look at a percentage change?
We'll start with a percentage change right now, Tom. Up
Let's do the data.
0.7% on equity futures. We advanced 30 points on the S&P. Going into the bond market this Thursday morning. Good morning to you all. Some stability, unchanged on 10s at 152.07.
unchanged.
In the FX market, euro dollar 115.60. Some great reporting from the team over in Frankfurt overnight, Tom. Yesterday evening, the ECB said to be studying a new bond buying program to replace the emergency bond buying program to go into 22
You can
with.
explain it. My brain won't,
I'll do that in about 90
It's
minutes.
6:02 in the
Let's do it
morning.
later. Crude softer again, lower negative 1.3%. Lisa 76.40.
Policy uncertainty turns into policy support once again, and that seems to be the theme, perhaps albeit fleeting, considering that there is some credibility issues when you talk about Putin to the rescue, as well as some others. Meanwhile, I am looking at the labor market data. We are getting the 8:30 a.m. U.S. initial jobless claims that we get every Thursday. The expectation is for it to trend lower, and you are going to see probably a big spike lower. Does that make sense? Big drawdown in the total ongoing claims. What I'm looking at, though, is the auto sector in particular. Temporary layoffs tied to supply chain disruptions. You can see that sentiment for buying autos has fallen off a cliff to the lowest on record. I'm wondering how much this indicates that the slowdown that we're seeing from some of these kinks has continued to impede the labor recovery. Then we've got at 11:45 a.m., Cleveland Fed President Loretta Mester is planning to speak at a virtual panel on inflation along with ECB's Philip Lane. This, to me, is the biggest conundrum. We've got CPI, consumer price indexes, up at the highest levels going back to 2008. The disagreements here about what's driving it, it really ultimately does come down to the labor market. And today, it is the final day of the Bloomberg Invest Conference. Yesterday was all about stagflation. Is it a thing? Is it not a thing? Today, we hear from the likes of Orlando Bravo, of Thomas Bravo, as well as Stephen Mnuchin, former U.S. Treasury Secretary, who probably will have something to say on the debt ceiling debate, John.
And they will ask him, is it a thing, is it not a thing? That's the debate of the moment. Lisa, thank you. On the day ahead, looking ahead to tomorrow, payrolls Friday coming right up. 500K is the estimate. This from Chairman Powell in the last news conference. Tom, it wouldn't take a knockout great super strong employment report. It would take a reasonably good employment report for me to feel like that test is met. That test to taper. Now, TK, we're going to do this for the next 24 hours. Once we get that number, we'll work out whether that is a reasonably good employment report, whether that gets it done.
I don't feel the energy here. We're so distracted with other issues, like the serious issues in Washington. This time around, I don't see the energy as 30 days ago, John. But with that said, you could get a surprise. I think wage dynamics could be something.
I'm with you, Tom. Looking forward to that report coming up in a little more than 24 hours. Joining us now is Sebastian Galli, Nordea Asset Management Senior Macro Strategist. Seb, the calm this morning, how durable do you expect that calm to be?
Not very durable, because what you have in essence is two narrative. One is the stagflation. People cry around and say it's a disaster and the like, which is typically what you try to do when the equity market is rallied so high, valuations are there, there's a deceleration in the economy, and you try to squeeze it, and there you have decent odds of doing it. It's been a miserable failure. If you talk about 5% on the drawdown, this is really nothing. And on the other side is this liquidity rally, which is continued for month on end, and which paints a future which, of course, does not exist in some styles, particularly within growth and as well as within quality. So we're trying slowly to return towards that fairy tale that we had before. And the other, with a decent NFP print, the Fed tapering quite gently, we basically are reversing towards that long-term trend. And it is not a realistic one in the sense of what is painted in the future, but it is what the market is hoping for, and it is a very strange market.
Okay, so Sebastian, how much do you lean into the near-term fairy tale, as you call it, and buy whatever you can heading into year end?
Well, you feel confident when there's a drawdown. You want to buy into it, but you want to diversify across styles, because some of the styles, particularly those which bet on the economy doing well, have not done actually so well, and probably will do well as people recognize that the economy is doing well. The labor market is tightening. People who didn't used to earn a lot of money are starting to earn some money, and that inflation, which is expected to stay sticky at a very elevated level for a long time, is actually probably to fade a lot faster, boosting equity. So some prudence, knowing exactly what you own, and some sense that the future is there for you.
Sebastian, you write wonderfully dense notes. And when I read your notes, there's always one paragraph that jumps out and hits me over the head. For our viewers and listeners, explain the magic of the dollar. It's enduring, isn't it?
Yes, it's a belief I have at home. My father was a banker in France and IMF economist, and he collected some books. So we have The Death of the Dollar, which was written at the end of the 70s. Many of these books have been written before, and it shows a different variety of understanding of how the dollar is important to the rest of the economy. But as it is trading right now, it is one of the very few places on earth where you can find safety. So when people feel uncertain, they bid the dollar. They also bid the dollar because they think the Fed is going to hike eventually. There's going to be some tapering. And of course, these two arguments are absolutely no coherent. The dollar is where liquidity is being pooled. Over a long period of time, we're going to see that trade has more and more difficulties. We're going to see rejigging of a lot of the supply chains and so forth. And that means a higher concentration of trade and liquidity going through the dollar. So it is the king of the system. It is where our belief and our fears are based. And so people are very, very nervous when you see the Democrats starting to play with the nuclear bombs regarding the debt ceilings, because, of course, that affects the value of the dollar and our sense of certainty, of safety, which is in the U.S. Treasury curve, and this belief in Americana.
Seb, there is a difference between a dollar bull, a dollar bear, and the dollar death cult, which is what Tom Keene is getting at. Can we talk about the dollar death cult a little bit more? Why are they so wrong and always so wrong?
They're so wrong because they believe, for example, you saw China and Russia during the great financial crisis. When they saw the crisis come, what they did is shorten the duration of their bonds, to hold very short-dated bonds, very little commercial paper. They pulled their funding out of American banks, European banks, and the likes, and put it all mostly in cash or cash equivalents, because they were very afraid of one thing, which is that the Fed would print away, inflation would surge across the board, and that would kill the value of the dollar as well as the assets that they held, probably with durations around 5 years in the case of Russia, as well as in China. And that cost them dearly, of course, because that didn't happen. And the dollar, of course, surged. And this is the essence of that fear that you see not only from these people who think like this in a certain way, but you can see that in big coins as well as other fiat currencies.
And here we are at 94 on the dollar index. Seb, great to catch up, sir. As always, Sebastian Galli, Nordea Asset Management Senior Macro Strategist. The dollar index 94.19. Tom Keene, capturing this, I think, perfectly. Just ask a fixed income strategist what they would do if things got dicey down in Washington. They will tell you, 99% of them will tell you they would buy treasuries. Doesn't that just speak to this story perfectly?
This is really important, folks, and this goes into jobs tomorrow as well. Do you look at yield, or do you look at what John just said, which is buy? Do you look at the price? And we forget, John, the wall of liquidity, looking for a warm spot. And you can argue about duration and all the rest of the stuff Lisa spends, 28 hours of her day on. But the bottom line,
29.
John, thank you. The bottom line, John, is price matters right now, and there's an insatiable demand for the marginal yield.
Remember, Tom, Lisa's got a long day ahead of her. 4:30 Eastern is when it ends.
I know.
When you get that central bank report, Lisa, from the Fed on how big the balance sheet is. I know you read that Max Kettner note from HSBC this morning, Lisa. What did you make of that?
I thought it was fascinating, and this is actually exactly where I wanted to go. He asked, when will fundamentals have deteriorated so much that it's time to reduce overweight positions in risk assets? The answer, probably not until the end of the year, early next year. And that partly has to do with the fading fiscal impulse, the fact that we're going to be getting back to the economic cycle. This, to me, is a real question, right? I mean, everybody kind of feels like this is a near-term fairy tale, not a long-term fairy tale. So when do you actually change your investment thesis? When do you actually take action, John?
Lisa has a friend in Max Kettner. We would reduce exposure to equities and high-yield credit into the new year. Then, Tom, start to fade the rallies as we get into 22.
I'm speechless.
Clearly. I can tell.
John,
Lost for words.
Right now, it's almost incoherent between the Bulls and the Bears.
Is this coherent right now?
It's odd.
Tom Keene,
No,
Lisa
it's
Bramis,
worse now.
Jonathan Ferro. Futures up 31, advances 0.7%. That was a rare moment, Tom. You had nothing to say.
I have nothing to say.
Yields unchanged, 152. From New York City, this is Bloomberg.
With the first word news, I'm Rishka Gupta. Democrats are signaling they'll accept Senate Republican leader Mitch McConnell's offer to raise the debt ceiling into December. That would avert the immediate risk of a default, but it also increases the risk of another political fight near the end of the year. A federal judge has temporarily blocked Texas's new ban on most abortions. He said the law outsourcing enforcement to bounty hunting members of the public was contrived to get around a constitutional right. It's a major win for the Biden administration, which has sued to overturn the ban. Heart damage from the coronavirus extends well beyond the disease's initial stages. That's according to a study from a Veterans Affairs health system in St. Louis. It found that even people who were never sick enough to need hospitalization are in danger of developing heart failure and blood clots a year later. In China, travel during the so-called Golden Week national vacation was down by a third from pre-pandemic levels. Government measures to contain coronavirus outbreaks prompted vacationers to spend time closer to home. That may be why Chinese movie theaters saw an increase in business. And there's a booming market for finance jobs in London. Now that the UK lockdown has been eased, there were more than 8,300 new listings for financial services positions between July and September. That's more than twice the number in the third quarter last year. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Natanggap ko po ang inyong nominasyon sa akin bilang kandidato sa pagkapangulo ng Republika ng Pilipinas. I am a fighter and I will always be a fighter inside and outside the ring.
Bloomberg surveillance to learn how to look at markets, how to look at trends, and how to look younger.
What do you think, John? Botox, or do I really need to get something done?
I think, Tom, if we just change the style up a little bit.
You think so?
Yeah,
You
drop
look
the bow
great.
tie. Drop the bow tie.
What,
Drop
skinny
the bow
tie?
Yeah. I always say, this is my line, whenever anyone in America has a go at me about a skinny tie, the older you get, the wider it gets.
Oh, really?
Until it becomes a bow tie.
This is a bow tie.
Until it becomes so fat, you just sort of...
What have we learned from this evergreen crisis so far?
From my investment perspective, I think diversification is very important. So far this year, we've seen many events, right? Maybe in the fintech sector, and education, casino, and property. So I think diversification help you lower your risk on your overall portfolio.
Medium term, though, are you seeing more risk and reward in the high yield space in Asia? I mean, how are you viewing this right now? Are there actually buying opportunities given just the selling we've seen?
This time is a bit different in the property cycle because in the last, when you see there's a tightening measure, there's always demand there, right? Just the government trying to suppress the demand. But this time we're seeing a confidence issue, is like a buyer strike because of the sentiment. The evergreen is hurting the sentiment and people don't want to buy. And other developers, because they want to get cash.
How far will the Bloomberg surveillance team go to get the inside story?
The UK will deploy its reserve tanker fleet this afternoon.
There we go.
Tom McKean and I might be part of the reserve fleet that gets deployed.
This is more complex than people think. The steering wheel's on the wrong side of the truck. That's the first thing.
Oh, my God.
Thank you to the gentleman out on Twitter that captured this moment.
Wait, question.
Wonderful.
Who of you has a driver's license?
You don't need that.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
We're making good progress. We're not there yet, but I hope we can come to an agreement tomorrow morning.
The Democrats who run Washington have done nothing. They've squandered week after week after week.
We are not going to default as a country. We will not default. I implore them to engage, start working, work this out. There should not be a crisis.
Majority Leader Chuck Schumer, Minority Leader Mitch McConnell, and somewhere in between, Senator Joe Manchin from New York City this morning. Good morning. Tom Keene, Lisa Abramovich, and Jonathan Ferro. This Thursday morning, this is what we look like. This is how things are set up. Up 30 on the S&P, advancing 0.7%. Yields unchanged at 151.89. Euro dollar unchanged at 115.59. The next stop for this one, jobless claims, 8:30 Eastern time. Then 24 hours after that, it's on to payrolls Friday. Politico out with his morning piece, Tom, why McConnell back down. Donald Trump, the president, the former president, and Senator Elizabeth Warren actually agree on something. Senate Minority Leader Mitch McConnell back down on Wednesday.
We go now to Washington, where we're really doing some surveillance reporting, and Jack Fitzpatrick joins us. Jack, it's understood that the compromise we'll see on kicking the oil can boy down the road is that the debt ceiling will be pushed out to 37 days after the Red Sox win the World Series. That's the operative point this morning. You got to be kidding me. If they move the can down the road, what happens then?
This does not exactly solve the problem. You're right that this kicks the can down the road. We actually don't know exactly how long it would kick the can down the road. One thing Republicans are pushing is that Democrats will have to raise the debt ceiling instead of suspend the debt ceiling, because if you raise it to a specific number, ultimately they're going to be able to campaign on that $30+ trillion debt. But by raising it, that makes it less certain exactly when it's going to set up another deadline. So this would be sometime in December. And the Republican insistence that Democrats act alone remains. Even though McConnell sort of retreated temporarily here, there's no change in the overall Republican position or in the Democratic position that they don't want to do that. So the issue is still very much up in the air, where the two parties are not sincerely negotiating on any real solution. This just happens to give them more time, though it again adds some uncertainty because of the difficulty of predicting the exact date when they get to that number.
You know, Jack, Tony Roman, the Washington Post today, had the senator from Iowa, Mr. Grassley, I believe, running again. And Grassley had, you know, as he does, the welder from Iowa cuts to the chase. They have to, quote, provide the votes. Do the Democrats understand how narrow their majority is?
They seem to understand how narrow their majority is, and they've got some pretty good experience lately whipping votes that are pretty challenging in working on the infrastructure bill and the reconciliation bill. When it comes to this, you know, this probably in the short term will not be difficult to get the votes, because the Democrats want a solution. They want to avoid a crisis, at least for now. And if they can get the 10 extra Republican votes on board and make it to 60, that would not appear to be a problem. The challenge, though, is Republicans are saying they have to do it alone eventually. And it's not that Democrats can't come up with the votes because of any underlying issue. It's that they don't want to go through the complex process, reconciliation, that would allow them to do that, because that would give Republicans unlimited floor votes on amendments that they want to offer. It's a matter of politics. The Democrats can get the votes, but they don't want to go through a sort of politically painful process that gives Republicans a lot of campaign talking points heading toward next year.
Yeah, I was going to say, are we talking about infrastructure right now, or are we really talking about the 22 midterm elections? Because that seems like that's ultimately what we're talking about. Is that really the case?
Yes, that is absolutely overriding issue, particularly with the debt limit. This has become such a stalemate that they're fortunate to have a temporary way out of, because for one, Republicans are insisting on a process that would, again, set up unlimited floor votes that would really just be messaging votes, but they're focused on 2022. And Democrats don't want to do that because they are so hesitant to raise the debt ceiling rather than suspend it, because if you raise it, it's going to be in excess of 30 trillion, and that sounds bad. It's not actually substantively different than a suspension, but both sides really are very, very focused on the 2022 midterms, and it's very significantly affecting how these negotiations play out, particularly on the debt limit.
This is the backdrop for that. Is this also the backdrop for an announcement from U.S. Energy Secretary Jennifer Granholm, who came out yesterday and said that the U.S. was considering releasing some strategic reserves of oil to bring down gas prices? This comes as gas prices rise to the highest in more than 7 years. Is this entirely political heading into 2022, when the higher the prices at the pump, the worse it is for the incumbent?
Well, it's a bit of a truism to say that gas prices are a significant issue heading into any election day. I don't know if we can necessarily entirely make the case that any action that the Secretary of Energy takes that would be aimed at lowering gas prices is entirely political, but it is an issue that pretty much everyone in Washington you talk to understands is a major factor going into 2022, and I'm not sure anybody expects it to just immediately reverse itself and go away. So that is a potential albatross for Democrats as we get closer to November of next year.
Jack, before you go away, we've got about 60 seconds. Put on a bit of a clinic for us. For people on the outside, from outside of America looking in, how important is this filibuster debate? How important is it for everything that's playing out around us in the last 24 hours?
It's very important. The debt ceiling standoff highlighted that there are a number of Democrats, not Manchin, but some of them, who would like some sort of carve out to the filibuster. Again, they have some carve-outs, the reconciliation process that they're using for some key bills. But the fact that even though they have that route, they want more, a number of Democrats want more carve-outs for the filibuster, is telling. We're not at the point where they're about to do it, but the rhetoric is heating up, and you can sense a lot of frustration on the Democratic side with the state of the filibuster.
Jack, thank you. See you in December, it seems. Jack Fitzpatrick there of Bloomberg Government down in Washington, D.C. Tom Keene, this feels very European, doesn't it?
Yeah.
Tee up the can, give it a hard kick.
No, it feels European, but John, we've been doing this for years. I can't remember the statistic of how many times we've done it. Granted, it's an original politics. Granted, there's an election coming up. I get all that, but, and I may really be wrong on this, John, and the people like me may be wrong, where we go, okay, it'll get fixed.
Year
I
end
could really be wrong.
Gets a little bit more interesting, doesn't it, Lisa? Year end with a Fed decision coming up.
I don't think we should go on vacation.
Year end with the debt ceiling conversation coming up. Year end with the infrastructure vote coming up.
Yeah, Tom, you're making friends by suggesting that nobody go on vacation.
Yeah, I think we should stay year end if it's going to be that exciting.
But, honestly, this is going to be really interesting, especially because the longer that we go without some resolution, the longer the Federal Reserve and the Treasury Department will run out of tools, emergency tools, to deal with the debt limit in an interim basis.
What did someone put in your tank this morning?
Well, it's here. It was to help me.
Why are you so upset?
Haley from Los Angeles sent me a bottle of champagne. She was in the fourth row at Chavez. And,
she was.
So
how
that's
come
why
we're
we
not
can't
in
go
the
on
fourth
vacation?
row?
From New York, this is Bloomberg.
of the Greek economic debacle. What were you thinking about to make Greece recover as it has?
Well, Tom, we took over in July 2019 with a very clear mandate to make the economy grow again. We were hit by the pandemic, but we still managed to implement very significant reforms, and I think we used the fiscal room that was available to us to support the real economy. We're very encouraged by the recent data. The economy grew 16.2% in the second quarter of this year. We revised our forecasts upward to 5.9%, and this may be a pessimistic forecast for 2021. We see lots of interest for foreign direct investment by American companies, European companies. We're making big progress in digitizing the state. We have a very ambitious green transition plan. And overall, I think the mood in the country after 10 years of crisis has significantly changed.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Let's just call the past 24 hours interesting. You can turn yesterday morning upside down. That's a reflection of where we are at the moment. Equity futures are positive, 27 on the S&P, up 0.6%. The Nasdaq up 0.9. The Russell to small caps up about 0.4%. The turnaround, the biggest turnaround on the S&P going back to February, from negative 1.3% to positive about 0.4% near the close. Switch up the board and get to the story of the moment. I'm not talking about the debt ceiling. I'm talking about energy and the verbal intervention we had on both sides of the Atlantic yesterday. From Russia, the president of the European Central Bank of Gas, Vladimir Putin, weighing in and offering some soothing words, apparently. That took natural gas from plus 40% to negative at the close. For UK natural gas, unreal. Right now, natural gas down another 2.85%. Look at WTI, really close to an 80 handle in yesterday's session. And then what happens? 76 and about 5 cents. We are negative there 1.8%, as Lisa pointed out earlier in the program. The energy secretary basically leaving everything on the table to do something about this oil rally. Switch at the board and end on this. In the bond market, 2s, 10s and 30s as we make our way towards jobless claims in around about 2 hours' time. Yields are unchanged at 151.72. On 10s, on 30s, 2.07%. Tom Keene, your next stop is payrolls 24 hours after jobless claims. We're looking for something in the region of 500K with a spread as wide as 0 to 750. We've got no idea. I'm not sure what the 500 really means, Tom.
I agree with the we got no idea thing, John. And as I said earlier, maybe it's not as big a deal as what we saw before. But with that said, I think it's really going to be interesting to see the wage dynamics, some of the underneath stuff. Like what are we doing with restaurants and bars, John?
No idea, but what does it tell you about the moment we're in? This is the September payrolls report, and the spread, the range of estimates is still that wide.
Yeah,
there's a basic conclusion there, Tom.
It tells you
highly unpredictable. We still don't know.
We're going to get to the first week in November and do the same ballet again into those two important Fed meetings that we see. Right now, what we're going to do is digress to an incredibly important essay. It is an essay for the year end, but much more is it an essay across generations. Richard Haas came out of Oberlin College of what I'm going to call the Eastern Midwest with the Council of Foreign Relations and their president, and all of that harkens back to a Midwest isolationism personified by Colonel McCormick at the Chicago Tribune a zillion years ago. Here is Haas writing in Foreign Affairs, and he is absolutely blistering. No other way to put it. There is a paradigm shift in the United States approach to the world. The new paradigm dismisses the core tenet of our 20th century approach that the United States has a vital stake in a broader global system. Ambassador Haas, are we all reading the Chicago Tribune? Are we going back to my grandfather's age?
I wouldn't call it quite that extreme. The United States, under the last two administrations, both Mr. Trump and Mr. Biden, has a fairly muscular policy towards China. So I wouldn't call it isolationism, but it's a narrowism. It's a domestic first. It doesn't particularly concern itself with building or even joining many international arrangements or institutions. It really is a domestic first approach to the world. How do we minimize what we do in the world?
Our Francine Lacroix interviewed Secretary Blinken in Paris in the last, I think, 48 hours. Are you conflating Anthony Blinken with Rex Tillerson?
No, but this administration has been surprisingly maladroit in its diplomacy. You've got all these people who speak French fluently. You would have thought they could have picked up the phone several months ago and told the French, look, it doesn't make sense to sell these diesel submarines to Australia. They don't have the range. They're not sufficiently quiet. But we want to get you involved in Asia. We want to find a way to compensate you for the lost submarine sale. This ought to have been within the realm of doable diplomacy. It's what the Brits, Francine, would call an own goal.
Richard, how significant is it that we're talking this morning about the fairy tale of Vladimir Putin coming to the rescue for the energy situation in the United Kingdom, in Europe more broadly? Does this signify the changing world regime?
Well, what this signifies is that Vladimir Putin has played his limited cards very well, whether it's his nuclear, his conventional military, his cyber, obviously his energy, and he's got outsized influence in Europe, and the Europeans have bought into it. Whether it's with Nord Stream 2, the Germans, the Brits, they've not been strategic.